Good morning, everybody, and welcome to Traders Corner's special holiday investors summit. The entire staff at Traders Corner wants to wish you a blessed holiday season. We have a number of great presentations today that will have highly discounted offers to celebrate the season, so you're going to want to make sure you stick around. On our panel today, we've handpicked 8 professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. Today's show is packed with great information and great discounted special prices too. So let's get started. Our first presenter is an extremely gifted trader and software developer who became interested in day traded as a college student. He started using NinjaTrader out of curiosity to test his ideas and now has over 14 years of experience with programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on the NQ, which he is most passionate about futures trading, but remains committed to building the best day trading tools. He enjoys connecting with his clients and bringing their ideas to life. Here to present Futures Trading Plan, My Approach in 2024 is Mr. Joel Wyse of Affordable Indicators. Welcome back to Traders Corner, Joel. And as an added bonus, ladies and gentlemen, I am currently using his tool suite, and it is amazing. Take it away, Joel.
Thank you so much, Rob. Merry Christmas, happy holidays, everybody. Quickly approaching the end of the year, and I think I have some stuff that you guys will be excited about today. Some of you have probably seen me present before. If you have, don't worry, I've got some new things today that I want to show you that I've been working on, that have been shaping the way that I trade futures. And yeah, so we're going to get into it. Thanks, Rob. All right.
Always welcome, brother.
All right, let's do this. So the title of my talk today is Futures Trading Plan, My Approach in 2024. And I'm just going to give you guys a quick overview of who I am. Let's see if we can. Yeah, so I went to school at Taylor University. Don't know if anyone is in Indiana, but that's where I went to school. Graduated in 2008, grew up in Ohio, moved to Atlanta, Georgia in 2029. 2029. Wow, that's in the future. 2009. Anyone from Atlanta, hit me in the chats. Anyone in Northwest Ohio, I'd love to hear from that too. I'm actually presenting from Ohio today. I'm up here for a Christmas gathering, so I've got a different setup. I have been full-time on the NinjaTrader platform since 2011. So shortly after college, I got into futures trading, actually first stock trading, and then progressed all the way to futures. I've been developing the platform, as it says here, trading futures since 2011. And in 2021, really proud about this, purchased an office condo where I was able to kind of permanently set up my work and separate my home life from my work life. And so I'm going to show you guys some pictures of that. I see you guys. James from Roswell, awesome, man. I would love for you to email me. I'm trying to kind of build a list of people that are local in Atlanta and hopefully do a live event in the spring. So please contact me. I don't want to miss that opportunity to hopefully meet you. Thanks, James. Northeast Ohio, Youngstown, love your trade copier. Thanks, Sharon. I see you, Earl. Thanks for being here, man. All right, so this is a picture out in front of my office condo with one of my favorite things, which is my Model 3. And if you guys have seen the Tesla Cybertruck come out, I'm really excited about that too. But that unit there in the background is where I work. You can look it up on Google. This is where I do my work life every single day in this office condo in Suwanee, Georgia. This is my office. I'm not presenting from here today. Usually I'll say, hey, I'm presenting from right here, but actually today I'm in Ohio, up here for a Christmas gathering this weekend. All right, so today we're going to cover risk management, and I'm going to get into some of my tools that maybe some of you guys have seen before, maybe you haven't. I'm going to talk about my own performance in futures trading And then I'm gonna cover also some new risk management techniques that I've been learning and applying lately, both on a trade-by-trade basis, but also on a daily basis and managing the risk across my accounts. So for those of you that use Apex, I won't get into what Apex is today, but it's basically a way to trade on low risk. These are my payouts. So I've shown this before, but I want you guys to see my latest payouts at the very top. Just this morning, the $6,000 hit my bank account, which is three accounts, $2,000 each. That's December 16th today at the top, pending in my account. And then at the bottom, I'm showing you guys where I have submitted $8,000 worth of requests that are still pending, but they're submitted on 4 more accounts. So this month I should get 14,000. In fact, 6,000 is locked in. The other 8,000 has been requested. So I'm really proud of this. This has been a long journey. I'm sure you guys know, right? If you've been trading for some time, it's not easy. And so
forgive the interruption, but congratulations, sir. That's amazing.
Thank you so much. I don't want to stay here too long because I know we have a lot to cover. Thanks, Rob. Man, yeah, it's special for sure. And I hope it continues, right? We don't know what the future holds. Trading is hard, but for now, like, I'm really happy with the way it's going. And I believe I have some stuff that can help you guys get there in 2024. That's what it's all about. So let's keep moving through this. A few ideas. I would think you guys want to write all 6 of these things down, right? This is just high level, let's say boundaries, let's say parameters, all right, around my trading plan. Now, this isn't going to tell you when to get in and get out, but there's just some ideas here, right? So trading hours, I'm only going to trade from 9:30 to 11:30. Not going to mess with any other trading hours. I'm going to set 2 hours aside to trade. Maximum trades, 5. What does this do? Prevents me from over trading. I'm going to get in 5 trades. If I've traded 5 times, I'm done for the day. Markets allowed, NASDAQ and ES. Now, most of my trades are all NASDAQ. In fact, I haven't probably taken an ES trade in a long time. All right, contracts allowed, 1 mini or less than 10 micros. We'll talk about this, but I'm going to vary my trade size depending on my accounts, okay? Language, no cursing. Have you guys ever been trading and you just get upset and you're just like, yeah, you're just done, right? My language is no cursing, my mindset's positive. Again, my dad challenges me on this all the time. I can be very negative mindset. I've been doing this for years, like, right? I've been struggling through it for years. You're trying to figure it out, right? So these are the parameters I've set for myself in my own trading plan. I'll just leave it at that. All right, I would encourage you guys to do the same in some form or fashion, to set up some boundaries and kind of reset the way you think about trading in the new year. All right, so let's keep moving. Gonna ask you guys some questions here that I think will have some value. Would your day trading results improve if you had strict risk management rules for each trade? Yes or no? All right, how many times have we blown accounts, cash accounts, right, before the days of Apex? Or you just find yourself thinking, how did I get here, right? How would it change if you had strict risk management rules? Have you missed a trade entry because the signal bar closes and you hesitated to place your order? Trade entries, right? What about this one? Have you missed a trade entry because price is moving too quickly to get the order placed? Another trade entry issue. What about trade exit decisions, such as determining the best target and stop loss prices? Trade exit, trade entry. In both of these, have you ever second guessed yourself when making trading decisions with trade entries or exits? Of course we have, right? How about no more second guessing? I'm going to talk about this later, about minimizing the decisions that we need to make while we're trading. So I'm going to propose that most traders are at a disadvantage. Day trading is different when you have the right execution tools. So I think there's a tool for every single person on this webinar today. What I'm going to show you real quick is my enhanced chart trader as the upgraded solution. So I just want to show you, I'm going to spend 5 minutes just showing you my chart trader. And then, like I said, after that, we're going to get into some specific trade setups in the chart window that I'm going to show you, as well as risk management and my Apex accounts in the trade copier window. That's kind of where we're heading, okay? So what is the enhanced chart trader? It's a suite of execution tools for both entries and exits, and it's going to allow you to build the perfect chart trader configuration based on your trading plan and your needs. The basic chart trader tools is a part of the enhanced chart trader, and what that's going to do is going to give you guys an improvement at a very low price. It's going to give you a great improvement on the standard NinjaTrader chart trader. So some of these features, we're going to jump to the charts in 30 seconds. Click entry, limit entry, exit order display features, break even, attach to indicator, trade executions display, bar counter display, and profit and loss display. So let's jump to my charts, and hopefully this goes well. Today we're on market replay. This is Friday morning. So yesterday morning, obviously I know what happens because I was watching it. Actually in the car on the way up here, I was watching it. I did not trade Friday, but it's going to bounce off the VWAP right here. Okay, this is the VWAP. It's a 1 minute NASDAQ chart, just so we're all on the same page. Now, on the right, I have my chart trader. On the left is the standard NinjaTrader chart trader. So on the right, we've got entry, right? So I can buy click and click the chart. Compared to a Ninja, I have to right click and then I have to select buy limit, okay? So you can see already where I'm able to precisely place my order immediately compared to Ninja where I'm right clicking and having to select through a menu system. I've also got limit buttons here. These are customizable. So Ninja's limit buttons, buy, ask, buy, bid, all these 4 buttons right here. Compared to what I have, you can customize them in more detail for limit order entry. I see you, James. Thanks for the comments, man. We could all improve on risk management, and yeah, check out the stop strategy stuff for sure. Exit order display features, right? So let's say I get into a trade. In fact, I know it's going to pull back because I watched it pull back to this whole number, which I loved, along with the 20 MA, and then it bounced again, but it came off VWAP and retested the high. Take your profits, 30 points on that, right? So I will select, we got to select an ATM. I'm going to sell market just to show you guys the exit orders, right? So my exit orders, you can display currency, you can display points, easily see that I have a $400 stop, $400 target. Compared to Ninjas, you just got standard order display. You guys with me on that? You also have a break even button on this. So basic, again, my basic chart trader tools is the get started package. Like, in fact, I'll just say it's going to be $115 today. I'm not trying to, yeah, it's going to be super like affordable for everybody to get on board and just get a new tool to start the new year with something that's going to help, right? So you've got a break even button here. All right, so let's say I want to go to break even, just click this button and I'm at break even on the short. Now, why did it move the profit target, right? Well, guess what? The break even button, when you're down in the trade, it's going to move the profit target because that's how you're going to be able to get out of break even. Make sense? All right. I know it's a lot, guys, but yeah, the break even button's a great feature. Attached to indicator. Let's say I want to buy the 20. What am I going to do? I'm going to hit buy click and I got to turn it on. Let's see here. I wonder if playback's going to give me some, oh no, right there. So I can click, here, I'll click the 50. 50 EMA, you see that? Now my order's attached to the 50 EMA and I'm able to trail it up on the 50 until it's filled. All right, so what I'll do is move this order up to fill it. And again, we can see the exit order display come into play there, where you can see how much profit you're gonna have if the market goes up, how much loss you'll have if it goes down this long. So again, able to attach orders easily to indicator plots. Trade executions display. You can see this right here as an example, not a great example, but when I got out of this trade, you can see my $10 profit. Target 1 was filled. That was the break even that we did. It was 1 minute and 3 seconds. You guys have seen Ninja's trade execution display. really it doesn't even compare. I'll just pull that up right here, hit apply. All right, so you've got lots of different text going on, way too many details we don't need. All right, so here in this trade, again, I should probably have a quicker chart up, but here's a $400 profit, right? 44 seconds, target one. You can see the details of the trade. Very rarely are my trades that quick, but some of them do anywhere from a minute to 5 minutes. Again, these features will be on any chart type. I'm just showing a 1 minute chart type today. My dad's been using tick charts. I also use range charts and other chart types as well. All right, you got a bar counter display, pretty standard, but just built in, counting down the seconds to the close. Clean compared to what Ninja offers, where it says time remaining, super clean and built for any chart type, the counter display. And then again, the profit and loss display. So with this, what's cool is I can see my NASDAQ profit for today. And if I go to ES, it shows 0. So I can toggle between all instruments or just the ES, which has no trades. So the profit and loss display is improved. You can also click to hide and show the profit and show commissions. I don't have commissions configured on this computer. So anyways, Dana, I see your question. I'm thinking, man, I know we're going to be short on time today. So some questions I may have to just direct you to email me, but I promise I will get back to every single person that reaches out. Okay. Love it though, man. Thank you for asking the question. If I have time, I will address it. All right, so that's the basic chart trader tools. So that's what I've built, guys, just like an improvement on what's standard on Ninja on the left and what's on the right is what I'm offering you today. So I'll give you the prices at the end. So now what I want to do is give you some more, hopefully, value in what I've been trying to apply. And literally, this is me just holding if no one gets anything out of this, I'm holding myself accountable to follow my rules and my plan on risk management. So let's take a look at this in the PowerPoint. This is what I've been thinking with risk management. I want to give you guys 3 points about risk management in the next 5 minutes. And then, like I said, we'll get back to the charts. I want to show more trade setups, hopefully more things right in the chart windows. I'll cover even Thursday when I did trade, some of the trades that I took as well, and things like that. So risk management, I think it's the most important thing to consider in futures trading. Let's talk about 3 aspects of why. The first aspect is trade setups. The second is going to be fear. The third is going to be decision making. We'll start with trade setups. Okay, I got to figure out how to go to the next slide. Here we go. All right. Trade setups, right? There's thousands of possibilities with indicators and logic. You know, you could be entering like every 5 minutes if you got your charts littered with indicators, levels, reversals, whatever. We use a ton of different stuff, right? My thing is, you know, use what you like. It doesn't really matter, okay? Because the market is random and always changing, right? So you might have a trade setup that worked great in a certain month and it now isn't working as great anymore, okay? Probabilities are hard to define perfectly. Really, if we could define a probability perfectly, then we would program it into a fully automated system. Well, how many of you have purchased or tried to code fully automated systems that just don't work? Or they do work in the past. In the last bullet point here, I said past performance does not predict the future. They seem to work, and then in the future, they stop working, right? This is why I'm primarily a discretionary trader. Right, and I have my trade setups. I'll show you my trade setups, but I think, again, we can't control what the market does, right? But we can control how we manage our risk. That's the main point with trade setups, okay? Let's look at the next one, fear. How many times are you guys sitting there on the charts, you see a trade that you want to take, only to just sit there, not take the trade, and it goes on to do exactly what you thought it was going to do. You're like, man, what in the world? Why did I not click the mouse? Okay, well, I think if you have a good plan with risk management, all of a sudden fear is done. We're done with fear, right? Because we have a predefined risk reward in every trade. We know our 2 possible outcomes as a win or a loss. And so now there's nothing to be afraid of. We just execute. We know if I don't have a stop loss, there's a lot to be afraid of, right? If I don't have a plan, there's a lot to be afraid of because it could just blow up my whole account. So on the flip side, if we have a plan for risk management, we're no longer afraid to execute. In fact, if we have a plan for our accounts, even if the trade loses, we can lose 20 times and we know our accounts are still going to be okay, right? So this is why risk management is so important, because we're able to eliminate our fear. And then lastly, decision making. I think that there's an idea here on decision making that if we can minimize the number of decisions in day trading, and we can eliminate some of those decisions if our risk management is predefined. I'm going to show you how I predefine my stop loss in every single trade and my profit target. All right. So this is a quote from Natasha Duke, who is a Master of Arts, I believe. I'm not even sure, registered psychiatrist. But the idea of decision fatigue has been discussed a lot lately. And this is the definition I'm giving you today. You can look this up. Anyways, it's a phenomenon as opposed to a diagnosable medical condition where the more decisions a person makes over the course of a day, the more physically, mentally, emotionally depleted they become. All right. So Steve Jobs, I think, was the one that wore, he had 5 black t-shirts, I think, or something like that in his closet. So it's one less decision. Every single day he's putting on the same t-shirt, going to work. It's one less decision about what he's going to wear, one less decision to make for the day. So it's a real deal. So what I'm saying here is, let's just summarize this, all right? Trade setups, fear, and decision making. If we can eliminate decisions, we're eliminating stress in our trading. With the risk, we're predefining our risk per trade, and therefore we're eliminating one more decision as we're day trading. And for me, it's in the 2 hours in the morning. Let's jump forward here. One concept I'm going to give you guys on how I manage risk in my trades is the ATR. You guys aren't familiar with the ATR, I'll show you exactly what it is. We're going to jump to the charts in 1 minute. It's a market volatility indicator. Take the high minus the low. So on a time-based chart, the size of your bars are changing a lot, right? And man, I could get into like time-based charts, tick-based charts, but for now, we're just going to talk time-based charts today, all right? And then you take the average of the last X bars, default's 14 last bars, and it's best with minute bars. All right, so let's take a look at the ATR. I just want to explain this concept to you guys and how I manage my trades. So, oh man, where's my charts at here? Let's see. All right, here we go. So if I'm going to go buy click here, I'm going to buy this pullback, right? Off of that. This is the high of 2 days ago. It's coming back. This is easy because I know what it does, you guys. It trended up all morning. It's probably a great buy right here. This is Friday. So if I submit this, you can see I've got a pre-planned stop of 31 and a target of 31 points. Why is that? I'm defining my risk by the ATR. So the ATR, we know that the average bar size right now on the 1 minute chart is about 16 points. That means from the high of each bar, spread this out, from the high to the low is an average of 16 points, okay, for the last 14 bars. So I'm multiplying that by 2. So 15.5 times 2 is 31. That's how I'm arriving at a profit target and a stop loss. I like this pullback because I've got the VWAP backing me up. I've got the 5 minutes, 20 and 50 EMA backing me up with the whole number and other trades, right? And my target is below the high. So I'm taking my profit before it even breaks out. All I needed to do is go retest the high and I'm out with a profit. Okay. Obviously, this is insane price action. It has been lately. Okay. But then once I'm filled, my target and my stop go in at those values automatically. So this is configured with my tools, all right, to put the profit target and the stop loss in at 2 times the ATR on the 1 minute chart. So it doesn't matter in here, I can close this. By default, my target and stop loss are 20 points, okay? That's like a basic standard for how I manage my target, my stop loss. But those are overridden. What my tool does is it overrides these before you're in the trade, and it changed those from a 20-point stop and target to a 31-point stop and target. Okay, so that's the ATR. I know it's a fire hose. Show the time at the bottom of the chart, please. Ed, you should be able to see the time at the bottom of the chart. This is replay. It's 9:50 Friday morning. Can everyone hear me? Can someone just say yes, you can hear me in the chat? A couple of you.
I can give that confirmation.
Great. All right, we're good. We're good. We're good. No one has. You guys don't have to say anything else. We're good. All right. Just want to make sure we're all here and on the same page. All right. So that's what I'm going to give you as far as the ATR. I think the ATR has a ton of value, but the idea is here just to keep moving forward in the presentation. If you're taking a trade, I don't care what your setup is. I really don't care what chart type. You should at least be targeting the same as you're risking in every trade at a minimum, right? So if you're gonna, let's say you're trading ES and you're gonna target 2 points, then you should be risking 2 points at most, right? Let's say that you're targeting 3 points, then you should risk no more than 3 points, okay? And I'm going to be putting some risk reward features in here, which I'm really excited about in the next version, which you'll be able to check this out. So if I'm planning another entry here, I know it's a lot on one chart. Let's go to the ES. Let's say I'm planning a short in the ES. You know what? Man, it's tough with being on the laptop and not having all my charts. But anyways, let's just close this trade. All right, let's say I'm pre-planning this trade. And I'm able to move my stop. So let's say I could say I want to get in at the VWAP. It's not going to pull back. It's going to go straight up. But I can pre-plan my target, my stop, sorry, and my target. Now, what I'd love to be able to see is that you guys are good at math. You know, let's say I'm risking 8 points on this, and I'm targeting 40 points. That's 5 times a target versus a risk, right? So what I want this to do in the next version is to be able to see that risk reward. And then as you move the stop, the target would adjust dynamically. So let's say that you're a guy that always wants to use a 2-to-1 risk reward, right? Then as you move your stop, your target would be moving automatically as you pre-plan this trade. So you're able to pre-plan the trade using my tool. So you see how I'm setting my target, setting my stop, setting my buy limit, right? The trade is completely pre-planned on the chart in real time. All right, so I got to keep moving. There's so much to cover, but I'm just trying to give you guys today really how I have been trading. All right, so let's close this. So with my essential chart trader tools, you get some of these features that I just showed you, which is the ATM strategy planning. You're able to pre-plan your ATM strategies. In the chart window before the trade's entered, you can quickly switch between ATM strategies. You've also got one-click order placement that I didn't show you, and in addition, position sizing features, which I don't personally use, but a lot of traders do size their position on every single trade. They like to do that, all right? So let's see. All right, so this trade is going up. Again, these are just pullbacks into the 20 and the 50 EMA on a 1 minute. You've got the VWAP here, and then I do use, so let's go back. I want to show you guys Thursday. Thursday is when I got some accounts above the funded level. I want you guys to see my key levels indicator here. So this is Thursday morning. I'm going to widen this out. I meant to do this earlier because we're kind of done with the Ninja Trader chart trader. So Thursday morning at 9:30, the market opened, and I definitely got chopped around. I forget what I was doing, but took a couple losses here early on. So I was trading, probably over trading, but then did buy the pullback. Once I felt like it was moving up, I bought the pullback into the VWAP and the 20 and the 50, took target at the high. And again, this is what I call first touch or first cross. When the trend changes to bearish, you get the 20 and the 50 crossing over, sell the pullback into the 20 and the 50 EMA. This cloud here is the 5-minute 20 and 50 EMAs as well. So when I had this pullback, it wicked up, almost came to the VWAP, and then just took a nosedive to where at the time, you see if you're applying my ATR, you had a 14 ATR. So I would be taking a 28-point target and stop. Yeah, John, thanks, man. 28-point target and stop. And then I sold the 20 again here, and that's when I was done. With these 3 winning trades, it's probably about 100 points on the NASDAQ. Now I was down 40 or 50 points to start the day. But that's where, you know, with these winners, and then I just quit. But check out yesterday's high. So what's drawing these levels are what I call my key levels confluence indicator. So yesterday's high is usually always, you know, a level of reaction, which it was right here. Once we broke below, yeah, it wicked above, came down, wicked below, right here, sell the 20, whole number, yesterday's high, you get the bearish bar, and then a follow through. So yesterday's high comes into play, yesterday's close comes into play, and then again, the crossover here, pull back into the first crossover of the trend change. Now, the red 5-minute is still down, but if you're day trading, you're typically looking at your fastest chart. So your fastest chart might be a tick chart, a range chart. I don't know what you guys use. Point is, it doesn't matter. The point is of this webinar, as I'm trying to teach you or discuss with you, risk management. What matters more is how you're managing your targets and your stop losses. All right, I'm running out of time. Man, there's just so much I'd love to cover. This was a crazy move down, which is very difficult to get in on. This is where some of you guys with tick charts probably be able to catch this move. I'm not even sure what to do with this move on a minute chart. It's just so parabolic. What's crazy is though it did pull back to the 20, and if you patiently waited, it did make a nice move down into S1. So key levels is going to combine high, low, pivots, and looking back several days as well, which you can't see here because we're making new highs on the NASDAQ, so you're not really able to see highs and lows from other days because we just keep making new highs every single day in the last couple weeks. All right, so I'm going to get back to the PowerPoint here. I want to show you guys some more tools and then give you my offer and kind of wrap it up. So if you guys use funded futures trading accounts, whether it's with Apex, Top Step, I'm going to be trying Take Profit Trader. Excited to try that one. I've been talking to their team on Instagram. Okay, but you're going to want this product right here. It's called My Accounts Dashboard. One window for tracking all accounts, keep all accounts in sync with one another. 2 pieces, the trade copier and the risk manager. And then the last bullet point, that trailing threshold. So you're always going to know at all times when, okay, you're always going to know at all times how far you are from potentially blowing an account, or more importantly, you don't want to blow accounts, right? How far you are from your profit goal, whether it's a evaluation account or a funded account. So I think everyone in here can get, for sure, the basic chart trader tools. And then if you don't have a trade copier, no brainer. If you do, I still think you're going to want my trade copier at the discount I'm going to give you today. Let's take a look at my trade copier. This is the fun part because, and guys, who knows, you know, I'm still, you know, on the fly adjusting the way that I trade, the way that I manage risk and everything else. But this is the truth right here. So these 3 accounts, 51, 2, and 3, I've pulled 2K from. That's why they're a little bit low. Now, I can see in the from close column how far I am from potentially blowing these accounts. Don't want to blow them, right? So I'll show you my risk management. We'll discuss that, how I'm gonna hopefully move these accounts back up. But right now, I just want to secure profits. These 54, 55, 56, 57, also pulling 2K. I showed you guys that. So I'll pull 2K from these. Some of these are going to be a little closer to that 50,100 than others. But again, I'm going to be trading for micros. Now, you should be doing this math with whatever instrument you trade. I'm going to discuss NASDAQ. All right. So 50 NASDAQ points, which is my goal to average, is $1,000. Okay. But I can also fairly easily be down $1,000. All right. So I'm talking about both sides of the coin here, not messing around. All right. So if I want to manage my risk better, knowing that I don't want to blow these accounts, what am I going to do? I'm going to lower my trade size, right? So if I lower my trade size, let's say, and I've worked all these accounts down here up on just 2 micros, just getting the day count going, working them up. They're all $500 above the starting point. But what I'm going to do is I'm only going to trade, let's say I want to trade 5 micros. What does that do? Okay, $1,200. That's 60 NASDAQ points that I have left before this account's blown. By trading 5 micros, I'm doubling that. Now I have 120 points left. Okay. Now, obviously, I want the accounts to move up, but I'm planning for both directions. As I lower this, 3 micros is going to be $300 for every 50 points. Okay. 3 micros equals $300 because what I say, 10 micros is $1,000, 50 points, right? So 3 micros, $300, 50 points. At this level, I have 200 points to risk, right? Now I'm not risking that in every trade, but if I have 200 points until this account's blown, what does that mean? I could lose 10 times, I could take a loss 10 times in a row, 20 points, 20 points, 20 points, 20 points, right? Before I would blow the account. On the flip side, the account's moving higher. So what am I going to do? As my accounts move higher, I'm going to increase my position size. As my accounts move lower, I'm going to decrease my position size. That's my plan at a high level, right? So with these accounts being down this low, they're going to stay at this position size until they get above a certain level, which I haven't determined yet. But as the accounts get further away from from closed, as they get further away from being closed, then I'm going to increase my position size. Ray, the duplicator works with Trade-Evate or Rhythmic accounts and any accounts that you can connect to NinjaTrader. Okay, so this is my trade copier, on-off button down here. Can't cover all the details today. But this is what you'll get when you purchase my duplicate account actions or trade copier product with the risk manager as well. That's how you're seeing these values. Now, one thing I'll comment on is that when I pulled 2K from each of these, I'm going to be adding another column because once you submit those requests with Apex, you want to trade those accounts as if you're planning that 2K is gone. So in these 4 accounts, 54 through 57, I really want to deduct the 2K right now so that when I start on Monday, those values I'm trading those as if that was gone. So it's covering a lot here, but I hope that makes sense to you guys. If you're trading Apex, I think it should make sense. Maybe go rewatch this later or something. All right. So just to wrap it up, I'm just going to quickly summarize what we've covered today. I hope you guys have gotten some value out of this. I think that there's a ton here, and I'm really excited to be back Monday. Actually, be Tuesday for me because we're traveling back on Monday. All right. So the basic chart trader tools, which I covered, is going to be 40% off. This is all the features that I showed you during the first part of the presentation. Essential chart trader tools, which includes the ATM strategy planning, where you're pre-planning your trade using the ATR. You're pre-planning your risk reward for each trade, things like that. You've got position sizing. That's going to be $595 at 40% off. There's also some other features that I didn't even cover today in this chart trader that I think can integrate with any trading plan, okay? Depending on how you trade, trailing stops, Renko and range bars, enter on the bar close, use a bracket. I've been playing with that kind of on the open at 9:30. It seems to burst and burst in the same direction. So that's kind of a bracket feature. The accounts dashboard. So this is what I just showed you. If you want to get the trade copier only to get started, $175 with the Traders Corner 40% discount. The risk manager is another $175, okay? And don't worry, I've got a page set up with all these options for you guys that I'm going to show you in a moment. Rob will also put the link in the chat. Key levels confluence indicator, yesterday's high, yesterday's low, pivot points, and all those things, the key levels that I'm watching, okay, to make trading decisions. And this is the all in. So I want to give you guys this opportunity. If you purchase the professional chart trader tools, which includes every feature, haven't even covered these today, but I'm going to show you on the website where you can read more. So bear with me. But my professional chart trader tools, which includes every single feature I've built into the chart trader. This is for managing your entries and your exits, everything like that, okay? At 40% off is $23.95. With that purchase through Traders Corner, I'm going to give you the key levels confluence indicator. I'm also going to give you the best MA's trend indicator. That indicator is how you can plot moving averages, okay, with the cloud, kind of like the cloud, I'll call it a cloud, but whatever, filling the area between moving averages for selling those pullbacks. Works on any chart. You can actually put, you know, a secondary chart on your faster chart using that indicator. Okay, all in for 2024, going with the tools that I built and the tools that I continue to work on. These three tools, in fact, the key levels, I'm continuing to add features. All right, you can see testimonials on my website. Show you in a moment. Here's the summary. Here's the link. Rob's got it in the chat. You guys can go ahead and go to that link, and then I'm going to show you right now as I wrap up in the next 3 minutes what this page looks like, okay? So I've summarized it right here. Actually, just so you guys can see, here's the payouts I've been talking about. Here's my December payouts, right? So we're making progress, 14K. If you haven't looked at this page, again, you can go to this page right here and search my name along with Georgia. And you can see the payouts listed right here on this page with Apex. All right. So here's all the offers summarized. You can click on the more information links to read more about the products. Again, these I didn't even cover today, but my enhanced chart trader has a ton of different features and options, trailing stops, enter on the bar close, lots of different things. People always have questions. I'm working on new videos for all of this. Scrolling down past the chart trader here, I talk about Apex. Here's where you can get the trade copier. It's called duplicate account actions. Both of these, you can click on more information. Every single thing has a more information link that's going to allow you to see more about that particular product. And then my big offer for today is the professional chart trader tools, which I would love to throw in the key levels confluence and the best MA's trend indicator. And what that does is, like I said, you're getting everything that you see on my chart. So you're going to have a chart set up exactly like the way I have it and the way I'm using it and the way I'm trading, the way I plan to trade starting off the new year. So I'm trying to think if there's anything else I wanted to cover. This page should really make it so easy for you guys to look and see and do your own homework on what I have. The offers are going to be good through the end of the day on Sunday. So you have the rest of this weekend to look into this and make a decision. All right, I know there's a lot of questions, and unfortunately there's just so much I had to cover. I've got like 1 minute left. Rob, you can chime in if you want. I'm finished. I
No,
would love to be able to
Joel,
just hang out and answer questions, but
I'd like to make a couple of points for you. I did a little bit of math. And if you made $14,000 in, the last month in 2 hours a morning, if we multiply that by 12 months, it's $168,000. And now
yeah,
if we take into account that 2 hours is only a quarter of the workday, and we multiply that 168 by 4, if you were to be able to replicate that as a full-time job, you'd make $672,000 for the year. I think that is absolutely amazing. And I can't tell you how brilliant I think it is that you put the cloud for the 1 minute and the 5 minute charts on the 1 minute chart so you can trade off of it, knowing what it's doing on the higher time frame. The just sheer powerfulness of that is brilliant, especially for somebody, scalping or trading on a very short time frame, looking to take quick profits, but to know what the time frame above it is doing as well, so that you're trading when they're in agreement.
it is, man. And Rob, if you guys use tick charts, I've been getting more into tick charts lately, range charts. But what's cool is you can plot those MA, like you can plot like a 1 minute 20 EMA on any chart. And I know you can do that with Ninja as a standard, but this actually has a more detailed plot. Yeah, I mean, you can, thanks, Rob. I appreciate that. Rob, if you could leave me as an organizer so I can look through these questions.
No, absolutely. And you're free to respond to them. And I mean, we know that after a certain point, we say, if you have any further questions, would you please email Joel at, but,
Yeah, thanks, Jeff. Thanks, Victor. Victor, I don't hire prop traders. Some of you guys, Steve Cherry, thanks for being here and saying that. Ray, really appreciate everybody being here. I know it's time to move on to the next presenter. What a cool opportunity, though. Merry Christmas, happy holidays. This is the best. Futures trading is something to be grateful for. I'm excited
guys,
for next year. So
Joel's tools making one-click access to do what you want to do. I mean, we've seen things run 3, 4 ticks, points, whatever it is. It can save you $100 or more on a click, or just those couple of seconds it takes to
yeah,
put whatever on the chart. Joel, I want to thank you so much for being here. I want to thank you so much for giving me these tools. Oh my God, they've really reduced my amount of, call it shrinkage, slippage, whatever it is, and increased my profitability factor. Thank you from the bottom of my heart. But
yeah, man, thanks for, I look forward to having more discussions about all this. So we'll talk, Rob. Thank you.
I think we're going to end up talking this week, Tuesday, Wednesday, after you're done traveling, stuff like that. But thank you so much for being
Sounds
here,
good.
Joel. Ladies and gentlemen, Mr.
Thanks,
Joel
Ray.
Wyse of Affordable Indicators. And it sounds like you've got a great plan for 2024. And by the metrics, it's going to be a good year. Thanks so much for making, the incredible offer to our audience. It's really amazing how powerful your stuff is. Ladies and gentlemen, and if you want some of these most powerful indicators, trade copier, trade management tools available on Ninja, Joel Wyse of Affordable Indicators has them for you at a tremendous discount today. Now is the time to transform your Ninja into a Super Ninja. It would make a great Christmas present or other holiday present for yourself. Joel, always a pleasure to have you here. We hope to see you back. I wish you safe travels and a safe and happy holiday season. I love your system, and I recommend to anybody getting his entire tool set. The reviews, the performance, the everything prove it. Have a blessed everything, brother.
Amazing. I'll be hanging around for Marina, and thanks, everybody.
Not a problem. And now that he keyed off who our next presenter is going to be, let me go ahead and give her the screen and tell you we're going to keep the ball rolling. And she specializes in helping people to day trade with confidence and ease. And if you have the desire to learn to day trade successfully, she simplifies the process by completely breaking down the art of identifying high probability trade setups. Here to present 4 steps to simplify your day trading and understanding the power of the breakout trade is Marina, the Trader Chick Villatoro. Welcome back to Trader's Corner, Marina.
Hi, Rob. Thank you so much for having me. I love coming back.
You're very welcome. Can I ask my favorite question?
Sure.
Where in the world is Marina, the Trader Chick?
Today, right now, I am in Barcelona.
Oh, beautiful.
Yeah. Are you back home?
I just made it back to the Northeast. We spent a week in Florida visiting my son's, paternal grandparents.
Oh, well, that sounds beautiful. Happy holidays.
To you as well.
Hi, everybody. Thank you so much for being here. I cannot believe it's already mid-December. I'm so excited. The end of the year is here. It was a really nice year. How's everybody doing? I know that there is so many people in the room today. I think this has been like the record-breaking amount, and I am thrilled to see all of you guys here. So happy that you guys are all here. Hi, James. Thanks, everybody, for joining today. And let's jump in. Today, like Rob said, we are going to be talking about the power of the breakout trade. Because let's face it, if you don't know how to do the power of the breakout, you're skipping out on a lot of amazing, amazing trades. And this is me. I am Marina, the Trader Chick. And today we are going to be covering a lot of really fun stuff, talking about the breakouts, so understanding how the market movements so that we get spotted and we can truly be able to capitalize on the breakout. Before we get in, I do want to just do a really quick official intro. And this is me. I am an expat. I live in Barcelona. That's why Rob was asking, where am I now? We actually just recently moved to Barcelona. Before, we were living in Costa Rica. And after that, we lived in Guatemala for 14 years. So we just recently moved to Barcelona. And we do travel a lot. Actually, last week, without us knowing, me and Rob were in the same state. Me and my husband surprised my father for his 80th birthday in Florida. But now we're back to Barcelona and off to Switzerland actually next week. I hope you guys have really cool plans for your travels, for your holidays. Traveling is without a doubt the greatest gift that you could offer anybody in yourself. Oh, right, you were in May. Yeah, May is a beautiful time of the year. Actually, I would say Barcelona at the moment seems to be almost perfect, always minus July and August when it got really, really hot. Other than that, the weather here is just phenomenal, absolutely phenomenal. So before I was a day trader, I was actually a fitness instructor. And the main reason I bring this up is because a lot of people think that day trading, you have to be an engineer, you have to be a mathematician or economics, and it's not true. Anybody could do it. As long as you apply and learn, really, you could become an amazing trader. And I am trilingual. And the only reason I am bringing this up to you guys is I learned Russian because I was born in the Soviet Union, so I spoke Russian from the moment I was born. But we moved to the United States when I was really small. So I kind of just continued learning and learned learned English as part of learning a language. But Spanish, I learned when I was in my late 20s. And when I started trading over 12 years ago, I was struggling a lot. It took me quite a lot of time. And when I started to look at the market, the way I was looking at learning Spanish, or the way I learned Spanish, at that point I was already fluent, it completely changed everything for me. And that's why I bring up the fact that I'm trilingual, because when you do learn another language in your later years, it has a very similar structure, right? For learning how to trade, the strategy, the commitment, all of that. And once I applied it, everything changed for me. The coolest thing about day trading is that you could do it from anywhere. And like I said earlier, me and my family, for us, travel is not a luxury. It's a complete necessity. We probably travel 3 to 4 months out of the year. The one benefit about living in Spain, the schools here barely seem to go to school. They seem to have more time off than in. So we're always planning. Every time my kids are out of school, we're always traveling. Before COVID, I used to do quite a lot of in-person shows, the Money Show, Traders Expo, but today I just really enjoy hanging out with you guys online because a lot more people could join. So we are going to be learning today the 4 basic strategies of the market, right? I kind of want to bring you back into when you first sat down in a car. And I know that this is something that we overlook today, but today when we hop in our car, it's kind of an automatic thing, right? However, when we first sat down in the car, everything was new to us, right? Where was the steering wheel? How to set up the windshield, the mirror, where the gear shift was, where the clutch, where the brake, all of that. And at one point, we shifted from learning and constantly be conscious of where to go, what to do, everything, to it becoming an automatic process. But if you did not learn those basics, you can never get to that automatic process. You just be still constantly getting into accidents, if you could even get out of your driveway altogether. It's very similar with the markets. Now, before I continue, I have the entire presentation completely for free for you. You guys could sign up right here, makingofadaytrader.com. And when Rob sends over the presentation replay, you guys could go over it at your own pace, but also you can follow along right now. So go to makingofadaytrader.com, makingofadaytrader.com, and you will get it immediately, completely free. So let's get back to those basics, right? First and foremost, most important thing, you guys cannot be Formula One drivers in a minivan, right? I know that sounds kind of silly, and everybody understands that, wow, you know, if you want to be a Formula One driver, you have to have the proper vehicle for it. Yet when it comes to trading, a lot of people are not on the proper vehicle. They're scrolling through their, you know, little whimsical apps, or they're with a broker but not on a platform. You need to have a platform, whatever your platform is. Today there are so many to choose from. When I first began, there was only like 3 or 4. So today there's quite a lot of really powerful platforms. You need to get on a platform. I personally use 2 indicators. I like to keep it simple because I travel. I like to only have 1 chart, 2 indicators, makes it super easy. Like I said before, makingofadaytrader.com, so that you guys can follow along. And let's begin. Market movements, right? We all understand that there are 3 markets, right? There's 3 trends, 3 different types of trends: the upward trend, the downward trend. But the one that we forget, that is probably the most important one of all, is the sideways trend. The sideways trend is that exhaustion pattern, the channel, the chop, the indecision zone, whatever you want to call it. When you learn to stay out of it, and when you recognize once it breaks through, that's when the magic happens. That's when the best trades actually start to happen. Okay, trending markets, you have the downward, the upward, and that sideways trend, guys. And my goal today is to teach you how to stay out of them and how to see when they break through. So what is an upward trend? It's really simple, right? Each pivot is higher than the next. This is when you call it the bull market, the market trending up. This is where you enter a buy. That means you're entering low, exiting high, you are going long. Okay, a lot of people do not even understand this terminology, and I get a lot of my students are like, oh my goodness, why did I get stopped out? I was going in for a high to go out higher, and look at it, and they actually got in as a short, as a sell. They did not even notice that they didn't know that there was a difference with a buy and sell. You need to know this before you could drive on your charts, before you're putting your money into the market, right? So what is buying? What is going long? It is when the market is trending up, you're entering low, exiting high. Okay, you're going long. You are buying. Downward trend, the exact opposite. All right, when you're entering high, exiting low, that means you are selling. You are going for a short. It's when each pivot is lower than the next, and our technical analysis is telling us that you're going to be making money on the down. All right, shorting the market. Guys, you could do a lot more trades and make a lot more money if you open yourselves up to shorting the market. Honestly, I would say probably the majority of the money from traders comes from shorting the market. Trisha, what connection? Trisha, I use the connection that is local. I don't have anything specific. Internet today is completely available to every single person. Super easy. It's not even a concern. Everywhere you go, there's amazing internet. I had better internet in Guatemala sometimes than in Manhattan. Just saying. So internet should never be an issue anymore. I know that a lot of people are still questioning, well, what do you use for internet? Every place in the world has internet at this point. All right. So now let's really dig into what are these consolidation areas? What are these transition areas? I personally call them the trader's worst enemy. And once we learn how to spot them and how to avoid them, the amount of money you will first save is incredible. And then the amount of money that you will be making after you recognize these areas, because that's when it's going to be the breakthrough or a transition. That is where the magic is going to happen. So let's focus on what are these consolidating markets. I just want you guys to take a look here. This is a channel. This is a flat line. This is like a no momentum. Nothing's going on. Do you really want to put money in a market that has absolutely no real movement? There's no decisions here, right? Like the market is literally just bouncing back and forth between two areas. And we really need to understand those areas. So here's the thing. I understand when you first get into a trade, when it first is beginning, but when you start to recognize that this is happening, that you're starting to become in a channel, you need to stop. You need to stop trading. Why? Because a lot of times people think that they could predict the market or beat the market, but in reality, they are simply not listening to what the market is telling them. And what is the market telling them? The market is literally saying, hey, I'm flatlining right now. I'm not really sure what I want to do. I'm not really sure where I want to go. So stay out. Because a lot of times us retail individual traders, we forget that there are three very important jobs that we have to do. One is know when to get in. Two, know when to get out. And three, and I honestly believe this is the most important one of all, is knowing when to stay out altogether. Sit on your hands, people. That is where you'll be able to save the most amount of money and have the right amount of money when it's time for a really good, solid trade. Also, it does not bring you into an emotional trading state. What does that mean, an emotional trading state? That means that your mind becomes emotional. That's when you start to chase trades. That's when you start to take revenge trades. That is when you lose all of your money. And you can feel it. I know now that I'm going to bring it up to you, you guys are going to recognize this, but you sense it when you are sitting there and you're focusing on a valid trade. Whatever happens, you get in the wrong time or you look the wrong way, you want to chase a trade, boom, there's this click in our head, and now it's emotional. Now we're chasing that trade. Now we need to do this. That's emotional. And this is when the power of a pro trader comes to life, when you stay out. When you understand that this is just an emotional way of looking at it and you need to stay out, gather your thoughts, and then enter again. And a lot of times it happens during the consolidation areas. So we need to stay out entirely for those consolidation areas. All right. A lot of times they could be small. A lot of times they could be larger. It doesn't matter, but you do need to understand that you do need to stay out. You'll never beat the market. You will never predict what the market is going to tell you, right? Just because the market is going up and gets into a channel does not mean it's going to continue in that direction. It can very well transition into a whole new trend. You need to give that time for you to understand when that is going to happen. And what is the most important thing of all is recognizing these areas. So how do we recognize these areas? What are these areas? They are the support and resistance areas of the market. I'm going to give another really important analogy here. I don't know if you guys fully know what Formula One is. I'm sure that everybody knows to some extent. It is when you are, it's a car racing thing, right? So it is also a known fact, and you can look it up on the internet, that 25% of the Formula One drivers during racing season either get into a bad accident or have a fatality. It's pretty severe. So what does that mean? Do you really believe that a Formula One racer is going to just hop in their car without any precaution and just hit that gas pedal and go 225 kilometers an hour? No, absolutely not. They have their helmets. They have their fireproof uniforms. They have several seatbelts. They protect themselves. 95% of traders, or quote unquote wannabe traders, lose money because they don't put any precaution. There's no barrier to entry to the financial markets. This right here are your seatbelts. The support and resistance areas are your seat belts. Okay, what does that mean? The market respects areas, and we, as the pro trader, the individual trader, that retail trader, we need to respect those areas as well. And once we spot the area, we need to draw it in. So what is a resistance area? It's when the market is going up and all of a sudden starts to hit the market over and over and over again in that same space 3 or 4 or more times. That is the ceiling of the market. So every single platform today, it doesn't matter if you have a free platform or what, as long as it's a good platform, they have drawing tools, even if it's just a flat line. All right, you need to draw it in. You need to put in that seatbelt because you do not want to be entering into that area because you don't know when it's going to break. All right, and sometimes it can continue for an entire trading session. That doesn't mean you can't take trades. You can take trades in the opposite directions, but I would not recommend in the same because you could hit it like, you know, one of those crash test dummies. You could be going super, super fast in one direction, but boom, it could hit that wall. You need to protect yourself. This is a resistance area. All right, what is the support area? It is literally the exact opposite. It is the floor of the market. It is when the market is heading down. It is when the market is hitting over and over and over and over again. Okay, that is the floor. It is the support area. You need to draw this in. You need to respect it. You cannot have mental areas, guys. It's like putting on that mental stop. Mental stops are literally as stupid as a mental seatbelt on your child in a car and thinking you're going to protect them in a car crash. It's not going to happen. The ego is always going to win when we have mental stops, and that goes for mental support and mental resistance areas. You need to draw these areas in. Then you could also recognize when you are in a channel. Look at this ugly, ugly, grindy, choppy behavior. Do you really want to be in this behavior? No, you don't, but you need to draw it out. And sometimes to the naked eye, without anything drawn, you might not recognize it, especially when you are in the live market with real live money. Honestly, the amount of adrenaline that is pumping through us is almost similar to a Formula One racer, right? So when you have your charts properly drawn out, when you have your charts and understand what is happening to the left while you're looking at your entry, you are going to be able to breathe better. You're not going to be as stressed because you know that you have done the due diligence, you have done the work, you see that this is where it's a good entry for the trade. All right, or the exact opposite, it's a good time to exit that trade because all of a sudden you're recognizing that there is massive areas. This is choppy behavior. This is not behavior I want to be anywhere near or put my hard-earned money anywhere near these types of markets. Okay, it's very important. And the coolest thing of all, guys, it's not hard. It's super simple once you figure it out. Now, a lot of times people ask me, okay, well, how do I recognize it when it's happening in the beginning? This is what I love. I love reversal areas and divergences. To me, they are literally the trader's map to the shift in direction and the trend. It is also like my go-to, my telltale signs. What are these areas? The reversal areas are double tops, triple tops, double bottoms, triple bottoms, head and shoulders, okay? They are so fun and so simple to spot. And I have gotten so many people with aha moments when they recognize these areas, and it has saved them out of bad trades or help them recognize when it is time to enter a new trade. What is a divergence? To me, divergence is literally my holy grail. What does that mean? So you could look here, the price action is going up, right? It has an incline heading up. Yet I personally use the MACDs. That's what those red dots are in the bottom. So the MACDs, I find them to be the least lagging indicator. Look at them. They are heading down, right? Declining. What does that mean? Does it mean that it's about to change direction? No. What it does mean is that the market is losing steam. It is losing strength, and it is literally saying to you, stay out until I figure out what I'm doing, until I give you confirmation if I'm going to transition or I'm going to continue in the same direction. But you have to listen to me and stay out. That's what the market is telling us. And when I have a reversal pattern with divergence, I'm fully out. There is 90 chance that it's going to either become a strong area or it could reverse. I don't do either until the market actually tells me what to do, but I do watch and I do listen and I stay out. I completely stay out, especially when there is divergence and reversal patterns. They are so simple, guys, that you can do it on any instrument. That is the beauty of it in any chart. You do not need to get anything fancy for this. It's literally like learning a new language, right? Hola, mi nombre es These are basics. And these are the basics of the market talking to you. And when you have that, that's when you're able to use it. So like I said earlier, go here, makingofadaytrader.com. So when you get the replay, you guys can go through it at your own pace. The entire presentation is there. So now let's begin. Breaking out of the areas. How do we even spot the valid breakout? First and foremost, it's really important to understand what is the breakout. What is a breakout? So I'm going to give this to you guys really simply. All right. You are living all the way at the bottom here at this very lowest pivot. Your best friend lives at the highest pivot. And they called you up and they're like, hey, I'm having a party. Come on over. You have been to their house a gazillion times. You hop in your car. You get on that highway that you know so well. And you're driving with full confidence, right? But all of a sudden, there is a construction site. And there's a construction worker and they're telling you, all right, get off. You got to get off. Right now, the road is closed. When I get into that kind of a situation, I stress out entirely because I'm not sure where I'm going. What if they stop with the detour signs? What if they never reopen the highway? What if? And Google Maps or Waze has not caught on to the construction zone yet, right? So what does that mean when I'm in that what if situation? I'm in a very uncertain position, right? I'm not certain what's happening. I'm really doubtful. I don't want to be putting my money on that. I could not tell you at that moment I'm going to get there, right? But then all of a sudden, the construction worker opens the highway again. It's like, all right, guys, come on through. The highway is open. It's fixed. You can continue. That is the breakout. You are back on the highway. You are zooming back. That's the breakout. All right. Super simple, guys. You do not want to be putting money in the detour zone, right? You do not want to be in that uncertain space. All right. So how do I go for the breakouts? So I use my two indicators. So below you'll see is the MACD's indicator. You'll notice the dashed black line. That is the zero. That is the area where there's zero strength in the market. Boom. And that's where the resistance is, right? It's kind of hanging around that zero line. But all of a sudden, it breaks through. You can see the massive movement here with the red dots away from the dashed lines. This is when it's showing massive confirmation that it is moving and it's broken out. I enter with my EMAs, right? Because I have that confirmation. There's absolutely no divergence. Boom. That is what I look for. Now, I have a bonus setup for you guys. As I mentioned earlier, how do you know about the transition, the new trend trades? What is the new trend trade? So imagine you guys want to go jogging, right? Imagine you are fully inspired. You've got your jogging clothes, you've got your shoes on, and you are out that door. You are full of energy. The chances of you running 1 mile or speed walking 1 mile is probably the highest once you exit that door. So I want to be putting that money on you as early as possible, right? That is that new trend. The earlier you get in on that new trend, the higher chances you're going to get a higher profit, right? So if you do not have your areas drawn out, if you are not understanding what the market is telling you, you're going to miss that out. And then you're going to start to chase those trades and you're going to miss it. And that's when you become an emotional trader. And that's when you end up losing a lot of money. When the market is literally talking to you, we need to just simply sit back and listen to it. And the greatest part of it all is that the market actually wants to work with you. It really, really does. All right, guys, remember, makingofadaytrader.com, go there. And you guys will be able to get the entire presentation handed over to you. Here's the thing, guys. We have absolutely everything we need to take action, right? We have these amazing summits. We have these amazing presentations. We have YouTubers. We have amazing books, podcasts. All of that is at our fingertips, right? We could sit for hours sifting through it but the reality is, at the end of the day, how do you know that you're doing it right? How do you know that what you just heard from this person or that person, how do you know if you are doing it right? Because all of this is great, but the real question that you're probably really asking is like, okay, I've got all this information funneling through, but how do I get started? And this is not from beginners only. I get this question asked from seasoned traders, from traders who have been trading for ages and are still not consistent. And they are constantly asking me, please tell me, how do I turn this around? How do I become profitable consistently? Because I want to make this my livelihood. And honestly, at the end of the day, it's simply lacking the understanding of the basics. As I mentioned earlier, there is no barrier to entry with the financial markets. A lot of times we overlook the basics. The way I like to explain the basics is we are putting in windows without any walls. Okay, think about that. We have not put in any bricks, that foundation to hold in the windows, and the windows just keep on crashing, right? That is the trades. We're constantly putting in trades, but there's nothing sustaining it because we don't have the basics down. We don't have that foundation holding it in place, and the windows just keep on crashing. That is that lack of understanding the basics, right? Going back to that car analogy, I need you guys to kind of go back. So for me and my husband, we just recently went through this kind of without wanting to, because our oldest son was learning how to drive a car, even though he's been in the car with us for years and years. When he first sat down behind the steering wheel, and we're like, all right, you got to put your foot on the clutch, on the brake, put your gear into first. When you start to release the brake, the clutch, he's like, wait, clutch, gear, what are you talking about? I don't know, because they are the basics today, right? And even though you've been a passenger, does not mean that you are the driver yet, because nobody talks to you about those basics. But if he did not sit and go through each step, he would never get the car out of even first gear, right? So those are the basics, right? We need to go back to those basics. And now imagine an even more creative scenario. Somebody enters your car, they've never been in a car in their lives. I know it sounds a little bit ludicrous, but there are people that are like that. And you tell them, okay, buckle up, it's gonna save your life. The seatbelt is gonna save your life. And they're like, buckle up, seatbelt. What is a seatbelt? I don't know what a seatbelt is, because you're not showing it to them, you're just telling them. So nobody is born with this information, right? We all learn it at one point or another. And that was truly my own sad truth. I spent over $20,000 on different trainings. I had different chat rooms. I had indicators. I had all this stuff. I was with all these different academies. But every time I asked questions, can you please explain the reversals? Please explain what is a support area? Please explain these basic things. I was either treated like I was supposed to be born with this information, or that I was just completely ignored altogether. And because of that, I was struggling and losing money for years, until I ended up losing almost $4,000 within a 5-minute span. And that's when I was just done. I was done. I quit because I felt like such a loser. I felt completely defeated. I've been now working on this for 2 years, and it simply was not moving forward. But here's the thing about quitting and about trading. And I know that every single person in this room is bit by the trading bug, right? And it never, ever stops itching. And do you know why that is? Because deep down inside, we know that we could do this. And that's exactly what happened to me. I walked away for about 3-4 months, but I didn't really go away, right? Because that itch was constantly there. So I started to kind of go and watch other people again. And I'm like, you know what? If they can do it, I can too. I'm smart enough. There's what is missing here? And that's when I went back and decided to go back to the basics. Today, I showed you guys, I have 1 chart, 2 indicators. But before that, I had 3 charts. I had 10 indicators. I was in constant analysis paralysis. When I came back, I literally donated 2 almost new high definition monitors to my garbage men. I completely removed all of my indicators. I was on bare naked chart price action only. And slowly I started to put in the indicators. So here's the thing, guys. There are a lot of indicators that people, you know, all these gurus talk to you about, and you feel like you need to be putting them all in. I was fixated on the Fibonacci's, on the Bollinger Bands, on the Kettler Bands, and many more. And all they kept on doing was really giving me a lot of stress and a lot of analysis paralysis. When I removed them, I have to admit, it was almost like this massive relief, because I never aligned with Fibonacci's, with Kettler bands, Bollinger bands. You might, and that's great, but you need to test it for yourself and not listen to somebody else tell you that. That is the most important thing. You need to test it for yourself. It's kind of like that elimination diet, right? There's a lot of people who have allergies and their doctor is like, let's eliminate everything and go back one at a time to see what are you exactly allergic to and what are you not. It's the same thing with indicators. And about a couple of years back, one of my students, he's like, your teaching methodology and philosophy is very similar to Coach John Wooden. And I'm like, who is this Coach John Wooden? I've never heard of this guy before. Obviously, I went online, I Googled him, and that's when I realized who he was. He's passed away now, was an absolute legendary coach, basketball coach in particular, and then he went on to be a life coach. But he was legendary. And his entire philosophy was, when in doubt, get back to the basics. And I mean, this guy's teams have won 88 national championships, 10 NCAAs. His accolades probably outnumber anybody all the time. He worked with A stars, right? With like the top of the stars, A-lister basketball players. Yet every single season, even after they have won all those games, he would get back to the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball, because it does not matter all that you know, because your ego is going to be pumping you up. It doesn't matter what you know, because if you're on that court and if you're running and your shoe is untied and your shoe falls off and you sprain your ankle, guess where you're sitting? On the bleachers, on the sidelines, right? For the rest of the season. You got to get back to the basics. So today I have a very special offer for participants only. I have my introductory course, Boot Camp for Day Trading. You guys could do it on any apparatus, laptops, desktops, tablets, phones, anyone. All of this is offered for $97. One-time fee. One time. This is not recurring. This is not over and over again. One time. Now, I want you guys to stop what you're doing, because you guys are here for a reason, right? We are all here to really, really learn. And the fact that you've taken that moment to be here, let's focus. I want you guys to go right this minute to your navigator and put in bootcampfordaytrading.com. Put in bootcampfordaytrading.com. All right, so you can follow along and see exactly what is offered. First and foremost, what can you get for $97 that brings us the same return on investment? Do you guys like to play golf? So as I mentioned earlier, we used to live in Guatemala. Guatemala, which is considered a third world country. And when we first arrived there 15 years ago, it was $29 to go golfing. Before we left, it was $119 per person. How about going out to eat and taking your family or your friends? $97 does not even buy you a good meal anymore, right? That is what your $97 barely takes you anywhere. That's how good this price is, the price point of this course, because I am here to just help you guys get past this. I know for a fact with this course, you can and will go to that next level. So let's break it down. What are you guys going to be getting? First of all, I know that there's an issue with platforms. I had a hard time setting it up. We go past that. I have a great tutorial. Boom, we are up and running in 30 minutes so that you guys can get to the fun stuff. Get to the fun stuff right away with the trading, okay? We will be learning all about the market anatomy, uptrending, sideways, downward trending, reversal patterns, divergences. We are going to be talking all about this. All right, but really, really diving deep into it so that, guys, you can totally spot them and totally understand what you are looking at. We're going to be talking about the support resistance areas. And again, divergence, guys, is literally my go-to for everything. It is my golden thing, and it is free, and you can spot it on any chart and any instrument. That is the beautiful thing about it. And the breakout, mastering that breakout, mastering that power of that breakout. And to avoid the fake out breakouts, because they happen and they are completely avoidable. All right, so you know what you are looking for those breakouts and to avoid those. And you guys get the entire curriculum for unlimited use, lifetime use. Okay, all this is valued at $1,600. all of this. You guys get all of this. Okay, here's what some of my students have to say. And I have students from all over the world. Like I said, internet is not an issue. You guys could do it from anywhere in the world. That's the beauty of trading. Michelle has said, I'm just finishing the boot camp. Best money ever spent. Derek, the only mentor that truly checks the work. Thank you for all that you do. I am enjoying your boot camp so much and learning every day. Now, remember I asked you something super, 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 super important. How do you know you are doing it right? After watching and listening and applying everything without any actual feedback, how do you know you're doing it right? So what I am offering in this $97, nothing extra, is part of the $97, one entire month, one-on-one with me, mentorship and coaching, unlimited feedback. 1 month. One entire month, one-on-one mentorship with me. Okay, guys, because that mentorship could be what will take you to that next level. And that was exactly what I'm offering. Plus, I have my own live trade chat room that I am doing weekly as well. And this is included for 1 month. You get the membership to be there. And it is me. It is not just some moderators. It is not just some admins. It's with me. We go over all of this. All this is valued at $2,600. The special price, one time, $97. Go right here, right now, so you can see it for yourselves. bootcamp4daytrading.com. Again, here's all that you guys will be getting. Everything in that course. 30 days one-on-one, 30 days live chat room membership. Here's also the reality of it. And this is a true reality. And I know for a fact this is the truth. This is worth less than one trade that you guys put in daily. I know for my own trades, I put in between $200 to $400 is the average price of a trade that I put in. And I'm a conservative trader, okay? So some people go a lot higher than that, and they certainly do nothing less than 97, right? So this is worth less than one trade. This course will 10x your return on investment, so you can go to 100 of these dinners and have fun. But here's the thing, all right? This room is full right now. And usually when there's such a full room, I sell out fast because I'm only able to take on 25 people. Why? Because of the mentorship. I really want to focus on you guys. I really want to be there for you completely. So I'm only able to help out 25 people at the most. So I recommend, because like I said, $97, this is it, all right? So let's go right here, right now, and we'll put in to our navigator or browser, whatever you call it, bootcamp4daytrading.com. So this is what you guys will look into right here. This is that order form right here. You'll see one-time payment, $97. I do have a payment plan of $59, 2 months. But regardless, you automatically get everything at your fingertips right away. Okay? You guys get everything right away, even if you do the payment plan. All right? So let's go here together. Bootcamp4daytrading.com. Check that out right now. All right. So I think I have quite a few questions here. Oops. Let's see here. Marina, what internet? Oh, right, that's where I stopped. Oops, hang on a second. Why is it not going? There we go. How much is the percentage between trending and non-trending environments? That's an overthinking question, and sometimes you just gotta check out what's right there in front of you. What is your YouTube channel? I am The Trader Chick. You can find absolutely everything in The Trader Chick. Okay, guys, for some reason my computer is not working properly. Is it? Yes, it could be used for absolutely all different markets and stocks, futures, forex, you name it, options. I definitely work with that. Okay, we'll give it a try. Thank you. All right, guys. Thank you, Ray. Thank you, everybody. Again, you could go right here, right now, bootcamp4daytrading.com. You can see everything that is offered. Also, you're welcome to go to my site, thetraderchick.com. And thank you, everybody, so much. And thank you, Rob, so much for having me here. This has been an awesome year with you guys. And have a really wonderful holiday season. Enjoy, travel, enjoy your family, number one. Thanks,
Thank you.
everybody.
Thank you so much, Marina. I just love how you simplify everything so everyone can understand and succeed at the art of trading. And not to key off who our next presenter is, but you talk about learning the language, the safety things, the seat belts, the harness, and he talks about the ejection seat just in case. Very powerful, 4 easy steps to follow. Simplify your day trading. Great stuff. Thank you for taking the time out of your day to join us on Traders Corner. Ladies and gentlemen, Marina the Trader Chick Villatoro. I've put her special links in the chat box. You can find her at www.thetraderchick.com. Marina, we look forward to another successful and wonderful year with you. And I wish you, the family, everybody, a happy and blessed holiday season.
You too. Bye, everybody. Thank you.
Thanks so much. Ladies and gentlemen, I'm going to take this opportunity just to throw the plug out there. We're working with a new broker called Mumu. If you put $100 in an account there, they'll give you 5 free stocks. If you do 1,000, they'll give you 15, and you get an extra one by clicking our link. I just put it in the chat box. But to keep things going, we sift through hundreds of pro traders here at Traders Corner to bring you only the most credible and qualified to participate on our shows. And our next presenter is just that. He's a decorated former Navy fighter pilot and graduate of the Navy Weapons Fighter School, Top Gun. He was also selected by one of the largest options trading firms to be their managing director in strategies. He's the founder and CEO of Options News Network, and in 2010, he founded Top Gun Options to train retail investors of all skill levels how to trade options. He's trained over 10,000 people to date. Here to present Solo Amazon, the only stock you need to own, is Mr. Matthew Whiz Buckley. Welcome back to Traders Corner, Whiz, and thank you for your service as always. And I apologize that I missed you. I was in Florida last week.
No worries, my brother. I appreciate it, Rob. Thanks for having me. I'm sure you'll make it back down here soon enough, and we'll definitely get together. Oh, good. Awesome. Looking forward to it. All right, folks. Good morning, good evening, good afternoon. Let's go ahead and get airborne. Excited for this presentation because we're going to finish out this year strong, and it was an epic year, as you're about to see in a couple minutes here. Could not have been a better year, and if you didn't have a good year, you're doing it wrong. And I hope that doesn't hit you too hard, because this ain't hard. Brain surgery is hard. Landing aboard an aircraft carrier at night is hard. Trading is not that hard if you know what you're doing. So everybody get rid of your electronic nicotine, no distractions, because I guarantee you, this is a guarantee. I'm starting my brief with a guarantee. You've never heard what I'm about to tell you. Now, what the hell is trading the Death Star mean? Now, unless you've been on the other side of Mars for the past 50 years, you know about this, what Star Wars is, or the Death Star is, right? This giant space station that literally was taking over the universe. Got attacked a couple times, got blown up, and then got rebuilt even stronger. That's the stock, the only stock you need to own for the rest of your life. And that doesn't sit well with you, like, I need to diversify. You've been lied to, and we're going to get airborne. As Rob alluded to, former Navy fighter pilot. So we're going to start with a quiz and a bit of an aviation theme, and it's going to make sense to you in a second. But which fighter aircraft would you rather fly? And you don't have to know anything about aviation to make a choice. You ready? Here's your first choice. I want you to take a look at that picture. That's the F4 Phantom, the Phantom II cockpit. Over 300 switches and dials in that cockpit. The aviators in this cockpit would spend a lot of what we call heads down time staring at all this stuff instead of eyeballs out of the cockpit looking for enemy aircraft or surface air missiles or AAA anti-aircraft artillery. This jet was so labor intensive, they actually threw another dude in the back seat to run the radar. Incredibly labor intensive aircraft. That's your first choice. There's choice B. 2 flat panel displays. This jet, this is the cockpit of the F-35 Lightning, the Joint Strike Fighter. Without a doubt, the most advanced aircraft ever created. We call this the Wonder Woman jet. It's invisible to radar. As a matter of fact, when the pilot looks down, the pilot doesn't see this cockpit. They see the ground. They look up, And displayed on their helmet, on their visor, are all the threats and anything that this jet wants to show them. And if you really want to get creeped out, this jet is learning. It's learning what the aviators are doing, and soon enough, the aviators are going to be gone. So trading, ladies and gentlemen, is a form of combat. Somebody's going to win, and somebody's going to get their ass handed to them. So wouldn't you want to use the same tools, techniques, and procedures that I use flying and fighting the F-18? The answer is clear. You would take the F-35 to fly into combat. However, a lot of you, as retail traders, are doing this, and you're flying this airplane, and I'm going to show you how that's wrong. My promise, by the end of this brief, I'm going to give you an up-to-date intelligence brief. You cannot trade anything without knowing what currently is going on, whether it's in the Middle East, Europe, China, you name it. You have to have an intelligence brief. What's going on with the Fed? What's going on with earnings, interest rates, you name it. Everything you have to know. You have to have situational awareness. If you wake up in the morning, put your bunny slippers on, drink a cup of coffee, and watch CNBC to get some trade ideas, you're an idiot, period. Do not do that. You're a very tactical trader. I'm going to teach you not to be tactical. I'm going to show you the only stock you need to own. And if you don't like what I'm laying down, a good substitute to trade. Now, real quick, why should you listen to me? You don't have to, but how's the smart money doing this year? Year to date, ladies and gentlemen, the average hedge fund is up 2.35%. So if you're ever at a cocktail party this holiday season, somebody's like, oh, I'm in a hedge fund. You can be like, and how's the smart money doing? That's how they're doing. Take a look at the S&P 500 for the past like 3-4 months. Absolute insane, rip your face off rally, implosion, rip your face off rally, implosion. Oh my God, we're going to die. No, we're not. Yeah, we are. No, we're not. Yes, we are. Oh my God, no, we're not. Look at that screen. It looks like absolute madness, doesn't it? If you're just a buy and hold stock trader, what do you need the market to do? Up and to the right. That ain't this market, folks. So I want you to keep in mind this chart of the S&P 500, and I just took this screenshot to make sure it was the most current numbers. I'll show you my actual brokerage account, but I just took this screenshot before I hopped on the air. 151%. This is my personal brokerage account, and I will show that to you in a second. The S&P up 20. The NASDAQ up, whoa, 38%. The Dow, embarrassing, 10. Ladies and gentlemen, I just showed you an extreme period of volatility in the S&P 500. Look at what my personal portfolio did. When there's blood in the streets and people panic and they don't know what they're doing, I print money. It's easy, ladies and gentlemen, right? Everybody's a genius when the market goes up and to the right like this. Well, guess what? No, you're not. Right? The only geniuses are the ones who can print money in volatile markets. As an options trader, I don't care which way the market's going, up, down, or sideways. As a matter of fact, as an options trader, I prefer down. I prefer blood in the streets. I prefer increased volatility. I love it. So this is why you should listen to me, is because I'm up over 150% year to date. I think I'm going to hit, I got a couple good weeks left in me. I might even bust 200%. What would you do if you made 200% on your portfolio in the past year? Okay, as Rob said, real quick, Whiz, F-18 pilot, Top Gun grad, adversary pilot, deployed for Operation Southern Watch, Noble Eagle, and Enduring Freedom. What's this have to do with trading? Everything. You do not join the Navy to get rich. You join the Navy to serve your country, to see the world, and all the recruiting poster stuff. Well, guess what? Instead of sitting in the ready room in between flights, drinking coffee and talking about football, I picked up the Wall Street Journal. I taught myself how to trade stocks and then options. And I applied everything I was learning as a fighter pilot to my trading, having a strategy, implementing tactics that support the strategy, risk management. Okay, that's a picture of Whiz inverted over Fallon, Nevada at Top Gun, and he's going to talk to me about managing risk. Yeah, I am. Options traders, fighter pilots are some of the most risk-aversive people on the face of the planet. We want to minimize all, you ready for this, known risks, and also contingency planning. Before I got airborne in a fighter jet, I knew everything I was going to do if something went wrong. How many of you do that in your trading? Not many of you do. You get into a trade and you're like, oh crap. No, oh crap. I think through the oh crap before I place a trade. And I know exactly what I'm going to do if something goes against me. How well did that work? It worked so well that I popped up on the radar of one of the largest volatility arbitrage firms, headquartered right there in the CBOT, the Chicago Board of Trade. I had a blast when this is our trading floor. I helped build a hedge fund. I helped build the retail brokerage options house, which got swallowed up years ago by somebody else, I'm pretty sure. And it was great. I was the managing director of strategy for this multi-billion-dollar vol arb firm, and I started the Options News Network, ONN.TV. I know John and Pete, I think they got clipped from CNBC, but John and Pete, they would pay lip service on options, right? CNBC is cheerleaders of stocks, very little options coverage. So I started the Options News Network on the floor of the CBOT, on the floor of the CBOT, to give you all a behind the scenes look at what was going on in the market. I jokingly tell people I was Valentine in trading places, man. A little old lowly retail trader going up to the big leagues. I got to be honest with you, folks. There is absolutely no such thing as the smart money, period. If you didn't realize during the COVID crash, did you see the COVID crash? I predicted the COVID crash to the day and made $2.5 million in weeks. How? Doing the exact opposite of the smart money. Ray Dalio, cash is trash, and oh, this is the bottom. I'd be a buyer of stocks here. How about Trump? Donald Trump, folks, a famous tweet that he deleted. I have a screenshot of it. Stocks look good here. I'd be a buyer of stocks. The next day, the Dow was down 3,000 points. One of the, what was his name? His name flew out of my head when I saw his face. He was on CNBC saying that we need to close the markets. We need to close the markets and, everybody just take a break. I'm like, no, dude. Just because you don't know how to buy puts or buy calls on the VIX and you're an idiot, I'm on the other side of your trades, buddy. Do not close the market. So ladies and gentlemen, me are the smart money. Wrote a book about it. It's called COVID Crash. You can get it on Amazon. You get a copy or you order it through me. I'll autograph it and send it to you. From panic to profit. It was like shooting fish in a barrel, man. Doing the exact opposite of what the smart money was telling you to do. Also have the No Fallen Heroes Max Afterburner podcast. You should check that out. It's ranked in the top 2.5% of podcasts in the world. And finally, before we get airborne for real, I actually have a party tonight, our No Fallen Heroes Foundation. I run a 501c3 nonprofit dedicated to trying to end veteran suicide. In the 45 minutes that we will be together, a veteran will take their own life, maybe even two. Anywhere from 22 to 44 veterans take their own lives every day. It's a mass shooting in this country. The 501c3 that I run provides healing grants to veterans, first responders, and their families to receive psychedelic assisted therapy. Now, if that blows your mind, you got to open up your mind. The name of the podcast is the Max Afterburner Podcast. You can get it on iHeart, Apple Podcasts, wherever the cool kids listen to it. It's on Spotify. You name the podcast platform. You can go look at it right now. And if you're interested in this, the Max Afterburner Podcast, episode 7 is where I debrief my first medicine journey. If you've ever seen the movie Lone Survivor or read the book, me and Marcus Luttrell, and if you drink coffee, if you drink Black Rifle coffee, JT, Jared Taylor, me, Marcus Luttrell, and JT went to Mexico 3 years ago, and it saved and changed my life. But we're not here to talk about that. I was just giving you a little bit of background about who I am and what I do. So in addition to helping people trade options and crush it, I also try and save the lives of my fellow veterans, first responders, and their families. So here we go. That's enough about me. How do you know when a date with a fighter pilot is half over? It's that point in the date where he or she looks at you and says, I'm tired of talking about me. Why don't you talk about me? So here we go. Now, I am going to lay this on you right now. And this might be, I don't know, man. I don't know if this is going to be shocking to you or not. So let me try. You ready? Here we go. Wall Street is lying to you. Now, half of you probably just said, duh. And some of you might be saying, what are they lying about, Whiz? How many of you, since day one of investing, have heard this? You can't put all your eggs in one basket, right? Day one of investing school, folks. You can't put all your eggs in one basket. What do you have to do? You must, say it with me, diversify. Diversification is important. It's required. The 5 steps to diversify, diversify, diversify. Ladies and gentlemen, it's an absolute lie. Now, Wiz, then who's lying to me? That guy. Ladies and gentlemen, whenever you use the word broker, delete the word broker and insert the word commission. Yacht broker, real estate broker, stock broker. They all make money based on what? How much you do. In the trading business, folks, I know this because I've seen it. It's called churn. Well, even if you weren't on Wall Street, you've seen the movies, haven't you? Wall Street, Wolf of Wall Street, Boiler Room. All right, boys, open up the phone books. We told the little old ladies in tennis shoes yesterday to get into this stock. Get them out of that one. Get them into this one. It's called churn. They want you in as many names as possible because they get paid a commission. Now, before somebody who thinks they're really smart types in the chat box, well, Mr. Smarty Pants Whiz, I don't pay commissions. I'm at Robinhood or some other joke broker. Ladies and gentlemen, if you're not paying anything, you're not the customer. You're the product. Did you not see the movie a couple months ago, Dumb Money? You know who's the customer at Robinhood? Ken Griffin at Citadel or Stevie Cohen. Do you not remember the AMC thing? Ken Griffin and those guys all getting wiped out and calling Vlad at Robinhood like, yeah, don't let anybody sell this stock. Remember, they changed all the rules in the middle of the night and wiped out retail traders. So folks, listen to me. And I'm going to be as blunt as I can. I'm a fighter pilot. Don't got a lot of time. I got to be brief. Diversification is for stupid people. That's offensive, Whiz. All right, then let's have a nice older man clean that up for me. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. So I said it more blunt, but there you go. That's a nicer way of saying if you don't know what you're doing, yeah, do a bunch of diversification thing. The only stock you need to own now and for the rest of your life is Amazon. Period. Okay, Wiz, I've heard of Amazon. Lay it on me. Let's go. I'm a chart guy. I'm a political science major from South Philadelphia, South Jersey. I need pictures. Holy shnikes, Batman. That's literally going straight up. Their net revenue in billions. It's a hockey stick. How about this chart? Man, I've been trading Amazon for decades. I remember in 2013, the current CEO, Andy Jassy, he wasn't, obviously Jeff Bezos was the CEO at the time, but what happened? They were in a condo somewhere and they came up with the idea for, you ready for this? AWS. Folks, AWS right now is Microsoft. Each one of these segments, folks, is growing like this. AWS is Microsoft. You don't want to risk or gamble on this. The hottest craze right now is AI. Andy Jassy, the last earnings call, said we've been building our own AI and using AI for about a decade. So welcome to the party, people. So folks, this is exploding. Now, I don't want to. When you say the word cloud, what do you think? Well, Apple, it's got an iCloud, and Microsoft's huge in the cloud, and everybody, Google, got to be clear. Loser, loser, loser. The biggest cloud company is Amazon, ladies and gentlemen, and growing. Now, I don't want to get too political, but I'm going to. Democrats hate this slide. Why? Delete the word Amazon up here and show me this chart. Wiz, would you invest in this company? All right, let me take a look. Wow, holy crap, look at the sales. Okay, well, all right, free cash flow. It's a big delta between the sales. Okay, all right, I'll tolerate it. They barely make any profit. I'd look at you and say, I want to short this stock. And I'd be an idiot. Why? And why do Democrats hate this chart? Ladies and gentlemen, Jeff Bezos is one of the smartest entrepreneurs in our nation's history. He laughs at the word dividend. Jeff Bezos, He's like, hey man, if Amazon makes $1, I'm taking the dollar and putting a competitor out of business, building another rocket, buying another airplane. I'm doing something with that. So he shows what? No profit. That's why AOC or all the other Democrats like, we're going to destroy Amazon with taxes. They don't make any money. He's brilliant. He's a dividend. No, 0 cents to have a dividend. So ladies and gentlemen, Amazon is the way to go. It's diversified in and of itself, and we're going to talk about that in a second. JG with a small account trading Wiz's Amazon trades netted $8,900 in a week. Kristen, you guys are amazing. I trade a smaller account and have done 22 Amazon trades this year for 31 grand. Christine, month-to-date profits on Amazon, 107 grand with more to go. Thanks, Wiz, for all your expertise and guidance doing day trades and short calls to protect my Amazon profits, learning from the best, and made me look like I was brand new last month. Monday through Wednesday, in 3 days, I made 90 grand on short calls against my 30 contracts utilizing Wiz's guidance. Now, before I sit here and blow sunshine and lollipop and unicorns all over the place, I'm a fighter pilot. I'm an options trader. What are the risks? What are the risks of trading a single stock? What are the risks of just trading one name? Any of you heard of a small mom and pop company called Lehman Brothers? 150-year-old company gone in 24 hours. Bear Stearns. Jim Cramer knows about Bear Stearns, right? That famous clip. He looked like Khrushchev at the UN, a small bald dude frothing at the mouth, slamming a shoe on the table. You're an idiot if you're not in Bear Stearns. Your money's safe there. 2 days later, it was at zero. Good call, Jim. Pets.com, Enron. I could take the next 40 minutes or however long we got together walking through the graveyard of stocks that go to zero. But guess what? What's the common theme with just these 4 examples? Let's go through them real quick. Enron didn't even own the building they were in. Watch the documentary. They were a middleman of electricity. They did nothing. Pets.com had a stinky sock and a URL. Bear Stearns and Lehman Brothers didn't even look like Lehman Brothers didn't even own their sign. They owned paper, counterparty risk. These things were gone in the blink of an eye. You ready for this breaking news? Stocks can go to zero. Technically, could Amazon stock go to zero? The technical answer is yes. The realistic answer is it's impossible. Why? Ladies and gentlemen, Amazon owns things. They don't own a stinky sock or not even the building they're in. Folks, I did consulting south of Miami years ago at an Amazon fulfillment center. It made the flight deck of an aircraft carrier look tame. Robots and it was bigger than an aircraft carrier. Folks, they own real estate. What else do they own? Things. Now, full disclosure, when I got off active duty, I went to fly for FedEx for 10 months. Hated it. Commuting to Memphis, showing up to work at midnight and flying till 8 in the morning and then trying to sleep during the day as, maids who can't read do not disturb on your door, bang on your door. It was a nightmare. Why do I bring this up? Because about 10? My God, how long ago was this? I forget. Maybe a decade ago. I still had a lot of buddies at FedEx. One guy ditched his pilot uniform and went to corporate. He called me one day and he said, dude, who's Jeff Bezos? Is Jeff Bezos the Amazon guy? I'm like, yeah, why are you asking about Jeff Bezos? He's like, well, a buddy of mine at GE Aircraft Leasing just told me that Jeff Bezos leased 5 airplanes. And I go, he's going to do it. And he goes, well, he's going to do what? I say, he's going to put you out of business. And he laughed at me. Guess who called his buddy 3 weeks ago? I did, to laugh at him. Amazon is now shipping cargo for outside customers in its latest move to compete with FedEx and UPS. Look at the date, 2021. Next article, Amazon poised to pass UPS and FedEx to become largest delivery service, blah, 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 2021. Check out this headline that was in the Wall Street Journal 3 weeks ago. The biggest delivery business in the U.S. is no longer UPS or FedEx. Amazon is eclipsing both carriers, and the gap is growing. Ladies and gentlemen, I call this stock the Death Star for a reason. Every industry it goes in, it destroys it. Amazon Prime, ladies and gentlemen, makes Netflix look stupid. I, years ago, told my TGO members, you want something to short? Walgreens, CVS, and Rite Aid. You will not be going. Why would you leave your home? Imagine going to CVS. Well, I don't think there's a Walgreens or CVS in San Francisco anymore, or it's all locked up behind plexiglass. I told people years ago, before drones were even a big thing, I said, someday you're going to get a text from Amazon. You're going to go to your front door. A drone's going to scan your face and drop your prescriptions in your hand. Or you're going to get a text. You go out into the street. There's your Amazon truck that doesn't have a driver in it who complains, has to go to the bathroom and get paid. And an electric truck, you're going to put your PIN on the side and the door is going to open and your package will be there. I nailed it. So Amazon is taking over everything. Whoa, hold on. Why is this guy on my presentation? Love him or hate him, folks. Let's talk about it. The President of the United States of America, during his first year of the presidency, woke up one morning or didn't go to bed, depends on who you believe, grabbed his phone and did what? Jeff Bezos, Amazon's a monopoly. Somebody needs to shut them down. Destroy Amazon. It's awful monopoly. What happened? That day, the stock went down just a little bit. I'm like, holy shit, what are you doing, dude? Then what happened? Nothing. 4 years later, at the end of his presidency, he also woke up and grabbed his phone. It's even worse, bigger threat to democracy and everything. It's a monopoly. Break it up. What happened? Nothing. But, ladies and gentlemen, there is political risk with Amazon. Okay, I'll scroll through some of these headlines, ladies and gentlemen. Let's be clear. Amazon is under the microscope. The FTC has filed suit against them. Why? They think they're too big. The last time I checked, ladies and gentlemen, it depends on the price of Tesla or Amazon. Jeff Bezos is one, if not the richest man in the world. I think he maybe has one or two attorneys on staff. I'm old enough to remember, folks, Standard Oil, IBM, Microsoft. How about AT&T? What am I rambling about? When Uncle Sam says, you know what, we think you're pretty damn big for your bridges. Do you know how long it takes on average for them to reach a decision? The earliest has been 5 years. The latest has been 15, and let's average that out to 10. So I like to use the analogy that Amazon right now is Mercury. If you tried to smash Amazon up right now, I'd buy the 12 individual stocks it becomes. It's too late. It's too big. You would create 12 little other monopolies. So I personally believe, folks, it's too late. Talking about the Walgreens thing and everything, do you remember a couple months ago, like, I think it was Atlanta, some guys walked into Lululemon, stole a bunch of stuff and walked out. And guess what? The employees followed them out to the parking lot, filmed them, and what did Lulu do? They fired the employees. James Woods, love him or hate him, I love this tweet. Just so everybody understands the game here, Lululemon and these other national brand stores don't care about theft because A, this crap is in fact virtually worthless, and B, they would rather sell it online, no fuss, no muss, no employees. When you see the stores locking up everything behind glass and forcing customers to select from a kiosk, it's a way to avoid excessive minimum wages to human workers and lawsuits from, all right, I'll forget that part. Invest in Amazon, folks. Pretty soon, it'll be the only marketplace left, period. And he's right. Now, I'm going to be clear before we start looking at some trades. I'm bipolar and so am I. What do I mean by that? I'll tell you how I feel as an American. I'll put on my flight suit and say, I can't stand Amazon. I can't stand Jeff Bezos. He's a limousine liberal. At the height of COVID, his employees were running around with no PPE or anything. He fires employees that try to unionize. He's an awful human being. And then I'm going to go in my closet, hang up my flight suit. I'm going to put on my $10,000 Armani suit. And I'm going to say, you know what, Whiz? You want a friend, get a dog. I love Jeff Bezos. Good. Employees want to unionize? Fire them. You want PPE protection? You buy it on your own. Ladies and gentlemen, like Gordon Gekko said in the movie Wall Street, if you want a friend, get a dog. So I'm going to show you how to print money trading the only stock you need. Now, I already briefed you on the potential risks of trading just a solo name. What are the benefits? Well, folks, you trade the same name and you're potentially going to profit no matter what direction it moves up, down, or sideways. I don't care which direction Amazon goes. I make money. I'm going to show you. I just closed an iron, or it expired yesterday for max profit. I made $2,000 this week on an Amazon range-bound trade. I didn't do anything this week. Amazon ran around a football field, didn't step out of bounds. I made $2,000 on $3,000 of risk. You stay focused on the news and events that impact Amazon instead of a bunch of different stocks and ETFs. You become an expert in Amazon, reducing time spent on other positions. Go back to one of the first slides I showed you, my trading floor in Chicago. We had a research desk, and by desk, I mean it was probably half the length of a football field. 25 analysts sat at that long desk. Those analysts, ladies and gentlemen, a senior analyst had 4, at most 5 stocks they had to eat, breathe, and sleep. A junior analyst had 1 or 2. Literally 24/7, they needed to know everything about it. Do you know how many times they got stuff wrong? So I'm going to tell you a quick little story. When I moved to Boca Raton, God's waiting room, I had a surgeon reach out to me. He's like, I hear you're a pretty good trader and I need help. I'm an orthopedic surgeon, pretty busy schedule, man, office hour surgeries, but I trade a lot. Need your help. All right, man, I'll meet you at Starbucks for a cup of coffee. Went to Starbucks. He booted up his laptop. And as he swung it around for me to look at his brokerage platform, I'm glad he's a doctor because I passed out and hit my head and almost died. Why? This doctor, ladies and gentlemen, had, and a hand to God, I'm not lying to you, 33 positions in his account. This guy who works 18-hour days and surgeries and office hours, 33 positions. God bless his heart, God love him. He tried to explain this stuff to me. He went right from the top. He's like, well, I think this is, I think that's a pot stock. I'm like, did you just say, I think it's a pot stock? Oh, all right. Now this one, this is a surgical stock. And my buddy got me into it and it's down 50%. But when it gets back up to here, I'm going to get out of it. I'm like, Doc, you're a doc, right? Yeah. That means you're pretty smart. I think I am. Have you done the math required from where it is now? Whatever. I'm like, stop talking, dude. You're done. Absolutely, you are finished. Folks, I do this for a living. 3 to 5 positions is about it. You want to see my long-term bullish positions? It's Amazon and public psychedelic companies. Did you see the news this week? MAPS has filed with the FDA a new drug application for MDMA. The site go look at MAP. We're in Solo Amazon. You join Solo Amazon. It's a gateway drug to. You got to come look at our psychedelic portfolio, folks. The psychedelic sector is exploding, and there won't be any looking back when these healing medicines are used. But ladies and gentlemen, simplify your trading cockpit. I do this for a living, and I'm long Amazon, and I got my psychedelic stocks. I have zero other time besides my day trading of my S&P 500. Now, if you're sitting here, let me go back real quick. If you're sitting here going, I like this, man, that guy's speaking to me. I'm looking at my brokerage account on my other screen right now, and I got 7 names in here. I don't know how you do it. If you're doing it well, God bless you. Keep up the good work. Why? In Amazon itself, I already told you there's like 7 to 12 different stocks that are already in Amazon, from entertainment to air to retail to pharma. You name the industry, Amazon's in it. Hell, they're going to be selling cars soon, I thought. So anyway, if you're like, dude, I like what you're saying, but they bit me in the neck. The broker bit me in the neck, and I have got to diversify. Well, guess what, Mr. or Mrs. Vampire? There is your diversification. You can also trade, or instead of Amazon, trade the XLY. It's an ETF, folks. It's the consumer discretionary ETF. And guess what? Just like shrimp are a vehicle for eating cocktail sauce, the XLY is a vehicle for eating Amazon. 25% of this ETF is Amazon. Look at the rest of it. You want diversification, baby? Tesla, Home Depot, McDonald's, Nike, Starbucks, Lowe's, Target, Booking, TJX. Ladies and gentlemen, there you get a good dose of Amazon and you get diversification. So, ladies and gentlemen, how do we target Amazon or XLY for max profit? When you join today, the solo Amazon brief is every Monday morning at 10 a.m., about a half an hour to an hour. Okay. Whiz, I work it every Monday at 10 a.m. 80% of my members work. I send out a text alert in the brief. I send out an email with a screenshot of the trade in the brief. And about 20 minutes after I get done speaking, the replay is posted on the member page. You do not have to be in the live trade brief. You get the trades the same time as the people are in there. Don't worry about it. So here's why I'm rambling about that, because Monday morning at 10 a.m., I'm going to welcome you aboard and we're going to do this. We're going to be a U.S. Marine. We are going to fly. We're going to hop in our F-35, fly out at the speed of light 2 years into the future, and we're going to get long-term bullish on Amazon. It's called a synthetic stock. It's a beachhead. It's a base position. That's one trade. I'm going to show you my current synthetic stock in about 2 minutes. After we establish our beachhead, our long-term bullish trade out into the future, step 2, I'm going to trade the front months. Like I have a long-term bullish position on Amazon, I'll show you. And then I did an iron condor this past week that made $2,000. So we'll trade the front months. What's the front month? You're sitting in it. The front month is December, January, February. Those are called the front months. So right now we have 2 trades on. So if you have like 10 in your portfolio, how are you doing? So now you got 2 trades on Amazon. If Amazon's going up, we'll trade bullish spreads and long calls. Uh-oh, Amazon's going down. What do you mean, uh-oh? I can make money when Amazon's going down. I'll do bearish spreads or buy some puts. And then this week, Amazon did up, down, but it stayed in a range and I made $2,000 on a range-bound trade. Remember, ladies and gentlemen, if you don't trade options, you just trade stocks, you can also make money 3 ways. It's called the buy, hope, and pray. If you buy a stock and it doesn't go up, you hope it starts going up. And if it doesn't, you start praying. So technically you don't make money 3 ways. I do. Amazon goes up, I make money. Amazon goes down, I make money. Amazon can even do nothing and I make money. And I'll show you all this stuff in 1 second. So let me put my cheaters on here and go to my brokerage accounts. All right. And men lie, brokerage accounts don't. So here's the screenshot I just took. Let me scroll down. There you go. My individual brokerage account, 8465, is up 151% year to date. With the performance, just as the fall came, September, where's my S&P 500? Ladies and gentlemen, look at the insanity in the fall here. This was absolute. Remember the tech rally from June to August 1st, and then it's been the Battle of Britain in here, and then that rip your face off rally. I, ladies and gentlemen, loved every second of it, and a lot of people didn't get to love every second of it. So there's all the performance. You can go to my homepage, topgunoptions.com, scroll down, and you can see my PDF of my E-Trade account. All the trades, I show you everything. This is my personal account. Now, let me show you one of the long-term bullish trades I have right now on Amazon. It's up $13,000, almost 200%, if you'll allow me to round up. Let me click Analyze. I'm going to show you here. Ladies and gentlemen, look at this. This is called synthetic stock. Let me just go to the options chain real quick. Let's go to options, and we're going to fly all the way out into the future looking at the Amazon chain. So let me go over to this one because here we go. Options. And let's go all the way, with not SPX, Amazon. Before I forget, folks, because somebody's like, hey, what are the psychedelic stocks? I'm going to give you some free trades right now. You ready? Write these names down. MindMed, MNMD. Look at me. I could not be a nicer guy. MindMed, you need to buy with both hands. MNMD. What's the other one? Compass. Compass Pathways. Look at this. MDMA legal for therapeutic use. It went from $5 to $9, almost doubled, folks. You need to buy Compass. I think another good one is a tie. It's really cheap. And also Cybin, CYBN. Okay, but I don't want to confuse you. But I have to, folks. When I see good trades, I love putting the ladder down and helping people out. But here's what we're going to do Monday morning at 10 a.m., or you're going to watch me do it on the replay. This is the options screen. You ready? I'm going to go, look at this. You can go all the way out to January of 2026 and get long-term bullish. So we're Monday morning, I'm going to show you how to do synthetic stock. Instead of coming out of pocket, if you wanted to buy 100 shares of Amazon right now, God bless you. It ain't going to be cheap. I'm going to show you using synthetic stock, which is using options to do it at a fraction. The ethos of an options trader is, why buy the cow when you can get the milk for free? I'm just going to rent Amazon for the next couple years and print money. This trade here, ladies and gentlemen, the synthetic stock, I think might even be a 6-figure trade by the time this thing is over with. I also have a front month trade on out to January on potential profits with Amazon, because I think not only are we having a Santa Claus rally right now, I think to the middle of January 24, we're going to get a rip your face off rally. And then February is going to be a nightmare. It's seasonal. It's always like this. September, October, I squish those two together and make them 1 month. Sept-Oct and February are the two most volatile times of the year. Think about it. We get this Kwanzaa, winter solstice, Hanukkah, Santa Claus rally. And then in the January, everybody's waiting for the earnings of Q4, right? It's like, hey, oh my God, Amazon destroyed, took over Christmas. And then February, it's usually that. I guarantee you. So I'm going to trade those front months on Amazon, but we keep that long-term bullish synthetic stock in the background, just printing money, right? We lower our cost basis. Every time we make money, we lower our cost basis on Amazon, okay? So I absolutely love this name. I love just trading one name. What's our year-to-date performance? I mean, this is the primary live trade brief portfolio. I signed into the wrong one. I should be in the solo Amazon portfolio, but even in the primary portfolio where I mainly trade the S&P 500, we're looking at about 38 grand in Amazon profits. We've had an absolute blast trading Amazon year to date. Maybe it's over in this account. Hold on 1 second. Month to date. Amazon, we're up $3,500, and it closed yesterday. So yesterday, there it is right there. This Iron Condor on Amazon. I closed this yesterday, made $2 grand on $3 grand in risk. It was a range bound trade. So we love tactically trading our Amazon here. All right, let me go back to this since I'm seeing some questions. Love it. How do we get airborne? Let me just give you this info, and I'm going to scroll back and be able to take questions here. It's our newest live trading service, folks. Our other briefs are normally $167 a month. This is $97 a month or $897 a year. And I think I'm almost going out of time here, so I went way too long. Can attend. I already told you about this. I sent out a text alert, an email alert, and I post the replay on the member page about, 20, 30 minutes after. Chris, I'm so geeked. Been a subscriber for almost 3 years now. This is the first time I've been able to attend live. I only know you from the replays. Today, I'm going to throw in your proprietary materials, your primary, intermediate, and advanced workbooks. Let's do some political science math. It's $97 for a month. $97 for a month. but I'm getting mad. If I went to his website right now and tried to buy these manuals, they'd be $197. Yeah, duh. So take the $97 a month offer and you get these manuals that are worth $197. So you're going to get access to my brief Mondays at 10 a.m., the text and email alerts, the manuals, and access to our online forum where you can interact with me and your fellow traders. I'm going to skip all these case studies. People are printing money with Amazon. So if you want to test fly it, Rob hooked me up as a wingman just now. He's putting the links in the chat box. You can do $97 a month, or if you're sitting here going, I'm ready now, take the annual. It's only $897 and it's a 25% discount. Okay. I guarantee you, you're going to love what we're doing here with the solo Amazon service. I feel like the Flex Seal tape guy, but wait, there's more. Even if you know what you're doing trading options, I'm begging you to take the full throttle training. It's kind of like being on Amazon. You're going to get a pop-up that says, hey, do you want to take the training? Folks, it's 8 sessions. Whiz, I don't know what a call or a put is. Well, guess what? Take the full throttle training. You're going to get access to my 8 training sessions that start with, hey, this is the market. These are calls. These are puts. We take a building block approach. By session 8 of this training, you will be a steely-eyed options trading killer. Who's this? Oh, Utah. This guy was a Blue Angel. He's a FedEx captain. Didn't even know what an option was, but he met me for lunch down in Fort Lauderdale. Good morning. Less than 20 trading days. I'm up 15 grand on a 40 grand account. So this was a Utah Mark Provo, a former Blue Angel, FedEx captain, didn't even know what an option was, and he's doing pretty damn good. All right, man. Again, I'm going to avoid all these, all that stuff. You can ask me if you want to see all these case studies, but the answer is yes. If you do the $97 a month for a couple months to make sure I'm not an idiot, just email us a couple months from now and go, hey, man, I want to upgrade into an annual to save some money. The answer is yes. So, folks, if you learned nothing today, I was a complete failure, but hopefully you learned at least this. Simplify your trading cockpit. Take a look around at your trading cockpit right now and go, man, was that guy talking to me? Are you talking to me? If I was talking to you, join our solo Amazon service, folks. Like Marina right before me, $97 down here in South Florida isn't even a decent bottle of wine. So for a halfway decent bottle of wine, join me at least $97 a month and check out our solo Amazon service. Rob, I'm usually better than this. I usually put it right through the bullseye to the second Zulu time. So I'm sorry I went over by 2 minutes, buddy. But have a Merry Christmas. Oh my
God, that's it. Call Guinness.
Yeah, exactly, man. I'm buying. Trust me. So my apologies for being 2 minutes off, and I'll make it up the next time.
Wiz, you're absolutely forgiven. You know, the trials of a live show. I want to say to everybody that did sign up for, his options. I've read the PDFs of the 3 booklets that you get, and whether you are a beginner, an intermediate, or even an advanced trader, they really do break things down, and there is something that you can pick up in there to help you. And the fact that you're getting $200 worth of books for test driving his service for $97 for the month, it really makes it a no-brainer. But Wiz, love your presentations. Always on point, insightful, relevant. Amazon is one of the most exciting instruments to trade. A lot of money to be made out there with that one ticker alone. And being a military vet, I really appreciate the respect and discipline and rules and strategy you bring based on the discipline the military teaches you to the table. And aside from that, I want to give you a compliment, man. I know you do a lot for charity, for the vets, for the first responders. You are a brilliant and amazing individual. I'm sorry that we didn't get to cross paths last week. But
that's all right, buddy. Yeah, just shoot me a text next time you're in town, and we'll go break some stuff.
Hey, I want to see your jet or go for a ride in it. You got to promise.
Absolutely, man. Yeah, we'll go up and we'll go bend the airplane around too, brother. So happy Merry Christmas, happy holidays, everybody, and I'll see you next time, bro. Happy New Year.
Sounds awesome. All the same to you, sir. Ladies and gentlemen, I put his links in the box. Wiz is a great guy, and his service is a great service. And if you can't guess, the personality and the fact that he's got a little bit of an inside with Washington makes a world of difference. Have a blessed everything, Wiz.
See you, bud.
Be well. And let me just pick our next presenter. And I know I mentioned at the top of the show, this is a holiday special, and we have a great lineup of seasoned professionals. Our next presenter is no exception. He's a professional trader, registered investment advisor, and commodities trading advisor. He's an active trader of his own account and also manages option-oriented accounts. He speaks on option strategies at many seminars around the world, and he is perhaps best known as the author of Options as a Strategic Investment, the best-selling work on stock and option index strategies, widely considered as the Bible of options trading. He's regularly quoted in publications such as the Wall Street Journal, Barron's, Technical Analysis of Stocks and Commodities, Data Broadcasting Exchange Magazine, Futures Magazine, TheStreet.com, Active Trader Magazine, and the list goes on. Ladies and gentlemen, here to present McMillan's Market Outlook, what option indicators are saying now, it is always an honor to introduce Mr. Lawrence McMillan of the McMillan Analysis Group. Welcome back to Traders Corner, Larry.
Hey, thanks, Rob. How you doing?
I'm doing pretty good. The Rip Your Face Off rally the last week or so has really made a big difference in my bottom line.
Right, sure. Everybody's smart in a bull market, right?
It's like the 80s, I think, or when Clinton was in office. Hey, how do you make money in today's stock market? Easy. You wake up in the morning and you buy something.
Right. Okay. So next 45 minutes or so, we're going to be discussing what our option indicators are saying about the market. Just a little background on our company. I started this after running a prop department on Wall Street for a while. I started this as a derivatives research firm. We were selling data, recommendations, etc. We moved into money management in 2008 because we handled the financial crisis pretty well. And we continued to do that. As Rob noted, we're a CTA on commodity side and a registered investment advisor on the stock option side. And then we also have a mentoring department, and we do a certain amount of option education, such as webinars like these. I'll come back to this later, but at this website, optionstrategist.com/MCM web, you can download the PDFs of today's webinars, both in grayscale and in color. So you can, you don't have to madly take notes while I'm talking about this. I'll come back to this later on. So the main things that we look at, the primary thing being, of course, the chart of the S&P 500, then equity-only put-call ratios, market breadth, where we have an option-oriented take on that, and then the volatility indices and their derivatives. So I have two very important rules. One of them is in effect right now. That's not this one. This one is oversold does not mean buy. That might have been more in effect last September when the market started to get oversold, but continued down into October. But the other one is overbought does not mean sell. So right now the market's overbought by a number of measures. You'll see that as we go through these things. But we don't actually have any confirmed sell signals right now, which is a little bit amazing, actually, I think, but that's the way things are. So I tend to follow the indicators to try not to put my own opinion in the way too much at the time, because the indicators have good track records, and opinion can be swayed by, your mood or whatever else is going on. So here's a longer term 2-year chart of the S&P. We had that bear market in 2022 back in here. That we bottomed out, finally going into a bull market, which is still in effect. We did have this correction, 10% correction there after July, but now we're off. We've broken through the yearly highs here in July, and now we're taking a shot, I think, at the all-time highs up there at 4,800. I'm going to change the color on the pointer here. Hold on one second. I think it's a little clearer if it's bright red. So this is a pretty bullish chart. There's really, not much between where we are now and the all-time highs, except for the fact that we've already come up a long ways, and we'll talk about that in a minute. A little bit closer look at the chart shows something that can be problematical, but isn't always, at least not right away. There's a bunch of gaps on this chart. So we started out last October. In fact, I did a show. I did the same webinar back then, and we had a short-term call by, but it worked out very well. Since then, the market has gapped up 4 times, the most recent one being when the Fed came out of the meeting in November and was pretty calm about things, and so the market took off, and we're still rising after that one. There's a little bit of support here, just above 4,500. That was actually an area that I thought we might fall back below and have a short-term correction, but we didn't. So now we're off and running again. Typically, when you break out over this area here that was struggling to get through a few times, you pull back and test that. We did not pull back and test that, so probably the next test is going to be a little bit uglier than you might want, but right now that's not in the cards. So just to kind of summarize that, the rally that began in October, at that time we did have oversold conditions which turned into buy signals, and there was a positive seasonality. That we'll talk about seasonality later, and so that got it going. The real breakout over 4,400 though was what really convinced a lot of technical analysts to turn bullish. And now we've overcome all the resistance areas except, of course, for the all-time high. I'm a little bit worried about too many gaps on the chart, but we are basically maintaining a core bullish position, and we trade signals around it. Now, I will say that when we are long calls, when they get fairly deep in the money, we'll roll them up to a higher strike. So that it doesn't optimize your upside performance, but I think it optimizes your overall performance. You take a credit out of the position, put some money, in the bank, so to speak, and you still have upside exposure when you do that, but you don't have as much downside exposure. So we have one further tweak that we do to the S&P chart as we create what I call modified Bollinger Bands. When John Bollinger invented Bollinger Bands, he used as the deviation, as the definition of volatility, he used the standard deviation of closing prices. It turns out that in the math world, the Black-Scholes model and other math people use the standard deviation of daily percentage price changes, which is slightly different. But since we're in the option business and our realized volatilities, which is what that is, have to match up with the implied volatilities, such as what's coming out of the Black-Scholes model, we need to use that definition. So we basically draw a plus and minus 4 standard deviation band. When it goes outside the 4 standard deviation, let's say, and it comes back inside the 3, that's a signal. So this has a really good track record in our longest term publication, the Option Strategist newsletter. This has been one of our mainstay strategies. So right now, with this latest rally, we're up above the 4 sigma band. That's this band right here. That's the 3 sigma. So you can see, for example, back here, we came outside the 4 sigma, back inside the 3 sigma. That was a sell signal. The red letters are successful signals, so we had a couple of sells, a couple of buys. The blue letters are ones that weren't successful. You can see here, for example, last July, the market broke out to the upside and then came back inside the bands. That was a sell signal, but it continued on higher. Now we have trading systems based on these, so we don't just stay short forever. But that was a losing trade. So this typically has a strong track record, and right now we're waiting for the next signal. Now we put a little bit of a twist on this, though. It's not just coming back inside the 3 sigma band that gives you the signal. We call that a classic signal, but we don't trade those anymore. They had too many whipsaws. So we actually have something called a McMillan volatility band signal. And so we are waiting on that. We have not had a sell signal from that since the last successful one last July. So right now we're waiting on that. We have a service, by the way, if you're interested in using this kind of theory on anything, any stock, any index, any ETF that works with TradingView. This is the TradingView MVB chart, and you can see it puts the little for sell signals with the little red things on them. So that's that sell signal I was talking about. Those were the premature buy signals, and then that was the last buy signal. And now we're up here above the top band, and we're just waiting for the next signal to occur. Just, they don't happen right away, so it could be a couple of weeks or who knows how long. We came outside here, but we never came back in far enough to generate a sell signal from the McMillan volatility band. So that was why we changed the definitions to avoid some of the whipsaws that had been going on. Anyway, this is very overbought, obviously. It actually got to about 6 standard deviations. And in the past 6 standard deviations, there's been an area that's been, very problematic for the market, but not necessarily right away. So again, we're waiting on a sell signal from this indicator, but overbought does not mean sell. So the next thing we look at is equity only put call ratios, or just put call ratios in general, but the equity only put call ratio, all stock options that trade, is what we use to predict the broad stock market. Put call ratios were invented by Marty Zweig back in the 1950s, and he was getting his data from the ads that ran in Barron's every Sunday, where the put call dealers would list their volume of puts and calls. And he noticed that when there was heavy volume in calls, the market went down, and when there's heavy volume in puts, the market went up. So it's a contrary indicator. Typically, let's just say it's IBM. At the end of the day, we sum up all the puts that traded in IBM. Separately, we sum up all the calls that traded, divide the two. That's the put call ratio. We keep a moving average, and it runs inverse to the stock price itself. So ideally, a put call ratio chart would look like this. The stock price is also on the top there, the put call ratio is on the bottom, and they have a nice inverse symmetry. But essentially, it works like this. Let's say the stock is dropping. As the stock is dropping, people are buying puts. Since puts are in the numerator of the put call ratio, that makes the ratio go up. Eventually, though, the ratio forms a local maximum. And when a local maximum has been formed, that's a buy signal for the stock. Now the stock starts to go up, move over to the left side. Here's the stock is going up, people are buying calls. That forces the ratio down because calls are in the denominator of the fraction. Eventually we get to a local minimum on the chart, and that's a sell signal for the stock. So that's the theory. We publish about 1,650 put call ratio charts every day on our website, in a very cheap data area that we sell access to, and I think it's only like $25 a month or something. But we also, of course, use these in recommendations in our newsletters and things. Now, this is not a current chart, but on top is the S&P 500 index, and on the bottom is the put call ratio. And you can see the inverse symmetry that exists there most of the time. And that's why we use the equity only put call ratio to predict the broad market, SPX. So where are we today? We had a buy signal, this ratio, the standard ratio, where we just use the volume of the options. We had this buy signal last October. It was a little premature, but it's still in effect. It's still dropping. We're still waiting for a local minimum to take place, which would eventually be a sell signal, but that hasn't happened yet. And so, this is perhaps, you might say, overbought, getting down to the lows on a chart, but it's still on the buy signal. The last sell signal we had was the end of July. You can see the local minimum there on the chart, and that was a pretty good sell signal. Captured, most of the gain of, or most of the way down. If you own puts, it was a gain. Anyways, we keep track of this all the time, of course, and we have these charts going back for a long time. But this, again, has been a very long-term successful indicator. Now, as computers came along, we were able to calculate another put call ratio, which we call the weighted put call ratio, or the dollar weighted put call ratio. So we can see how many dollars are being spent on bullish opinion and how many dollars are being spent on bearish opinion in the option market. In this particular case, we take the options closing price, multiply it times its volume of the day, and that gives us the dollar volume for that option. You could do that trade by trade. That's a really expensive and time-consuming process, so we use this. We tried the other more expensive process for a while, didn't seem to produce any better results. So we make, let's say again for IBM, we make that calculation for every IBM option that traded that day. Then we sum up the dollar volume for all the puts, separately sum up the dollar volume for all the calls, divide the two, and that's the dollar weight or put call ratio. So the signals come at about the same point, but they're usually at more extreme on the chart. So here's the current level of this as well. You can see this formed a buy signal back here. There's the local maximum right there. And you might wonder why is the buy slightly to the right here? Because we use a computer program to analyze these charts. It treats it kind of like a chess tree. And the computer was still thinking that might have not been the actual local maximum there, and it didn't give the all clear till about right here. So we were a few days late with that buy signal, but it's been a good buy signal. Now we're getting down here towards the lower levels of the chart. Again, this one gave us sell signal, local minimum back in the end of July, beginning of August, and you can see the other ones on this chart. So we get 6 or 7 signals a year. I consider that sort of an intermediate term indicator. Right now, again, it's bullish. It's been bullish for a long time, and so we're probably considered to be overbought, but we won't have a sell signal until it rolls over and starts to rise. So if you keep track of some other ratios, I know some people do, there's also a buy signal from the CBOE's equity only put call ratio, and also from total, which is options, index options plus stock options. Now, there's a kind of an interesting thing going on. If you follow the CBOE put call ratio, every now and then you'll see this big number up here. That's because there's some arbitrage going on in there, mostly on Wednesdays. It has to do with earning interest over the weekend. And so that gets the ratios distorted. We tend to throw that data out and when we're calculating our ratios so that we get a more accurate picture of speculative activity and not just arbitrage activity. So what do we trade when we're getting these signals, the Bollinger Bands or equity only put call ratio buy and sell signals? Well, since I'm in the business here of using these indicators to predict the underlying, I want to make money if I'm right about the underlying. So I don't want to buy an option that could lose money even though I'm right about the underlying. And the way to prevent that, of course, is to buy an option with a fairly high delta. The delta just tells how much the option is going to track the stock price. So a call option ranges between 0, which means the call is not going up at all when the stock is going up, or 1, it means it's tracking it point for point. Obviously, the higher the delta of the call, the more that the option is going to behave like the underlying, and that's what we tend to look for. So typically for short-term trading, which is what those things are, we're looking for an option of 0.7 or higher. So if we're trading SPY options, that's 1 or 2 strikes in the money, usually with their 1-point strikes. If we're trading a little bit longer thing, like put call ratios where we can be in for a couple of months, 3 months, and if you're buying a 3-month option, obviously that's more expensive. So to cut the cost of the option back, you buy an at the money option. You still, though, have a pretty decently high delta. So if the stock goes up, the option is going to go up, and for the more the stock goes up, the higher that delta becomes. So if you watch on TV, you'll see a lot of times they'll recommend using a bull spread or a bear spread instead of just buying a call. Most of the time, that's the wrong thing to do. I'm going to repeat that. Most of the time, that's the wrong thing to do. Even though that's all they do on TV, trading on TV is not trading in real life, I guess. So a call spread would be this. You buy a call at a lower strike, and you sell a call at a higher strike. So the underlying is when it's moving up, the call at the lower strike is making money. But when you get to the top strike, that short call cuts off your profit potential from then and forever, unless you buy it back. So the only time that it really makes sense to spread is if the underlying volatility, implied volatility of the options is high. Right now, that's not the case in too many places. But usually they'll say, well, you're risking less. That's not true at all. You're risking 100% whether you buy the call or you buy the bull spread. Now, this picture shows you that, yes, the ultimate dollar risk is a little less if you buy one bull spread versus one call, but you can obviously balance that out by just buying, say, 3 calls or instead of 4 bull spreads or something. But this is where the crucial thing comes in right here. If the stock really gets going to the upside, your long call keeps making money and your bull spread does not. Now, what if you did do a bull spread though, because you thought the options were expensive? Well, you can mitigate the negativity of that short option in 2 ways. One, widen the difference in the 2 strikes as implied volatility increases, or roll. I should say, and roll if the short strike is hit. So here's currently, we're only spreading calls, SPY calls. This is based on these indicators that we've seen so far. We're only spreading SPY calls in February or later. Anything earlier, we're just going long calls. But the volatility is higher out in February, more expensive options. So if we're spreading a call, we're spreading it 15 to 20 points wide on the call bull spread. Puts, on the other hand, are more expensive out of the money, so we are using even a wider spread there, say 30 points or so. And when I said roll if the short strike is hit, here's an example. Suppose Monday you go in and you buy a SPY February 470 call and you sell a 485 call, so 15 points difference in the strikes. And you're fortunate enough to see S&P rise to 485. So now you've gotten up to your short strike. And at that point, there's really not a whole lot more money left in the spread. Yes, there'll be some, but not a lot because you cut off your profit potential essentially above 485. So sell the spread you own and set up a new spread, and take the profits here and then set up a new spread here, 485, 500. Or if they're cheap by that time, they don't even bother spreading, just buy the 485 call. In any case, this is what we do in our recommendations and our speculative sport portfolios and our daily newsletters and in the option strategist newsletter. So I was trading options all the way back in the beginning, 73. So a lot of experience has gone into developing what I think is a strategy that makes sense just in general for handling speculative options. Let's take a look at some individual put-call ratio charts. Now, in these individual charts, we only trade the extreme highs and lows, the extreme local maximums, local minimums. So, and this is equity residential. Again, as in that other chart, a red letter is a successful signal, a blue letter is not. So, this was, at the time, this local minimum, when we look back here, 600 trading days, that was a very low point on the chart. And, it was a decent sell. Now, we just recently, the put buying in this was so heavy this fall that it forced this to what was the highest level ever. And now we formed that local maximum, got a buy signal. So we're long EQR. Same thing for Walgreens. This stock has been in a downtrend for a long time. And finally, the put buying got so extreme that it forced it all the way up here to about 800, 900. What that means is that $800 are being spent on puts for every $100 being spent on calls. This is the weighted ratio, so we're talking about dollars. And that's a lot, especially for stock options. Maybe you would never really see anything that high, even in index options. So there's a buy signal there. Now, this one hasn't worked out quite as well. Again, a couple of weeks ago, we got a buy signal here. We were waiting for the stock to break out over that red line right there. And it did, but now it's falling right back below. But this brings up a good point. How do we stop ourselves out of a losing trade? We don't stop ourselves out based on the stock price once we've used this indicator to get in. We might use the stock price to aid us in getting in, like this case. But once the put-call ratio buy signal is in effect, as it is here, we're going to stay with this option that we bought until the put-call ratio is no longer on a buy signal. So as long as this ratio continues to drop, we'll still be long the calls on this. So we've had, this has really been one of our better individual strategies, the put-call ratio buy signals on these individual stocks. And as you might imagine, that's working pretty well right now because we had a lot of negativity coming out of the, July, August, September, October time period, which resulted in, local maximums on these put-call ratio charts and gave us buy signals. Now, you can do this with futures too. This is soybeans. On the bottom is the put-call ratio chart drawn with the soybean options that trade on the Chicago Board of Trade. So we use those to get the signal, but you don't have to trade soybean options on the Chicago Board of Trade necessarily if there's an ETF that mimics soybeans. And in this case, there's an ETF SOYB. So we bought SOYB calls. In fact, we still own them, even though it hasn't performed all that well, but we're still long the SOYB options. So the next thing we look at is market breadth. And while the breadth of the market can be measured in a couple of different ways, there's two indicators that we make out of it. First is advances minus declines, and then also we can keep a cumulative total to create an oscillator. I'm sorry, we keep a cumulative total, or we can create an oscillator. So in our case, the oscillator is defined as being today's value is 90% of yesterday's oscillator value, plus 10% of the difference between today's advances minus declines. Now, as I said, there's a couple of data sets. You can use New York Stock Exchange advances and declines, and that's fine, although there are some things in there that are not stocks. So we use also, we calculate two of these. We use what we call stocks only. And for us, stocks only means every stock that has listed options. There's about 6,000, there's more than 6,000 of those now. So it's a nice, robust data set. So here's the current oscillator condition. And we recently gotten so overbought that it's almost at an all-time high, right here. This is the all-time high back there, but we're extremely overbought. But again, overbought does not mean sell. In fact, we won't consider this to be a sell until it falls back below here, which is plus 200, and that would give us a sell signal. You can see the oversold conditions here are in green, and for this chart goes back 10 years. And for most of that time, we were in a bull market, so there weren't too many green areas. But then when we went into the bear market in 2022, we did start to get quite a bit more green. But now, of course, this last rally has produced an extremely overbought condition. So we're keeping an eye on this. Again, another overbought area, but not a confirmed sell signal. That just more or less summarizes what I just said. So another thing that we look at, I'll just insert this here, is new highs versus new lows on the New York Stock Exchange, as well as with our stocks only data set, or also on NASDAQ. Now, the first thing it's had a few signals this year. They've been pretty good. But there was a sell signal for the market back in September, and this caused us to end that sell signal when there were 2 days in a row with more new highs than new lows. So we had no signal for a while, but now here in late November, early December, new highs rose above 100 for 2 days in a row, and that gave us a buy signal. Now it felt kind of late. I mean, the bottom was, a month before that, and but I've seen this indicator sometimes come in a little bit late to the party, but the party still goes on for a while. So that's what's happening here. It went long at the beginning of December, and we're still long. So we'll be long here until new lows top new highs for 2 days in a row. And you can see the last few days here, new highs are just off and running at a huge rate on the New York Stock Exchange. And of course, stocks only, which is a bigger data set, is doing even better. So, you know, this indicator right here is not giving any indication of a sell signal yet at this time. So let's move on to volatility and the volatility indicators. We look at VIX, of course. VIX you can't trade. It's a very complex index, but you can trade its futures and options. So a couple of things about the index, though. First, the trend of VIX is important. It should be trending opposite to the market direction. It does trend opposite to the market direction over 75% of the time. And the longer data series that you're looking at, you know, more time you're looking at, the higher that number goes. Also, spike peaks, if there's a little panic in the market and VIX spikes up and back down again, those are buy signals. So low VIX is an overbought condition, which is where we are right now. VIX is down to 12, but it's still not a sell signal really until VIX begins to rise. I'll talk more about that later too. Here's the current 1-year chart of VIX. The B's are buy signals from the spike peaks. Red or orange is, again, a successful signal. Blue is not. So you can see that we had a successful buy signal there in mid-October. That one is actually no longer in effect. The trading system that we use for the spike peaks is a 1 month. So we're in the signal for a month. So we ended that one about back here in terms of SPY. Well, this, we ended it in mid-November. So now VIX is low at 12. You can see we finally broke down below. Hit this yearly low had been 13 for quite a while. We finally broke down to that. Last time we were at 12 was in January of 2020, which was an ominous time preceding February of 2020 when the market finally broke, and then March was, really bad market. So, but VIX just being low by itself is not a sell signal, as I've said. You would need to see VIX start to rise. Now, the trend of VIX is downward, and by that I mean when VIX, here's the 20-day moving average of VIX right here, and this is the 200-day. When the 20-day crosses below the 200-day and VIX is also below, that determines the trend of VIX as being on a sell signal, buy signal. I'm sorry, VIX is going down. That would be a buy signal with the stock market. The last one of those we had was, all the way back on the left side of the chart there, the other circle, where you can see that in November of 22, we had that signal right here. So they can last for quite a long time. And in this particular case, I mean, it's happening with VIX at a very low level already, or it did happen with VIX at below 15, but still it's worked well and the market's gone up. So we do pay attention to this. And of course, it's something that I'll show you in a minute how we refine that signal itself. But right now we're in that signal. And if VIX were to climb above its 200-day moving average, and that would stop us out from that buy signal. So, as I said, we can't trade VIX, or we can trade VIX futures and VIX options. So we can use the futures for one other very useful thing, and that's to determine, again, whether the market has a bullish attitude about volatility or bearish. So in a bullish market, the various futures contracts, as you go out in time, each one trades at a slightly higher price than the one before it. And so we say the term structure slopes upwards. In a bear market, the term structure slopes downwards. Now, we haven't really seen this since March of 2020, but it's still something that if it happens, it's really pretty nasty. However, there are ways to use that to make money. I'm not going to talk about them now because we're not anywhere near a downward sloping term structure. So here's the current term structure. I took these prices from the closes last night. And you can see each futures contract as we go out in time is trading at a higher price than the one before it. So the term structure slopes upwards. Meanwhile, the premium on the futures, so here, VIX closed at 1228. So the December future, which is going to expire next Wednesday, is 1257 minus 1228, means that has a 29-cent premium. But the others, since they have more time, have much larger premiums. And again, that's a positive picture. So term structure slopes upwards, futures trading at a premium. If you don't, you can easily get access to the futures by just going to the CBOE Futures Exchange website. But also you can quote 6 CBOE volatility indices that they publish every day. Now, the one that everyone's most familiar with, of course, is VIX. That's a 30-day index. But they also publish a one-day index, which is useful for trading the 0 D to E options. I'm going to be doing a seminar on that just after the first of the year. There's a 9-day index, a 3-month, a 6-month, and a 1 year. These are the prices where they closed last night. And you can see, once again, they're sloping upwards. The upward slope is bullish. So this whole construct thing is bullish right now. The thing we watch for here is if the front month VIX future, and after next Wednesday, or Tuesday actually, January is going to be the front month. So we'll be watching January VIX futures versus the price of February VIX futures. If January rises above February, that's a problem, and you should take immediate defensive action. Right now, February is well ahead, well above, so there's no worries on that regard. But in February of 2018 and February 2020, this inversion occurred, and you had, I'm going to say 4 or 5 days to get your affairs in order before the market completely tanked. So that's something to definitely keep an eye on, and of course we do that for you if you're a subscriber. So summarizing, we have no sell signals, nothing there on the right-hand column. Everything on the left-hand column is a bullish signal. We've talked about all of those. And then we don't have a spike peak, and we don't have a McMillan volatility being a signal at the current time. And so we're just in a full bullish mode, really. The signals can't get more bullish than that. Yes, we're overbought, but we got into these. They were starting in the end of October, and really all the way, as I said, the last one we had was the new highs versus new lows there at the beginning of December. So these came at various periods of time between those two dates. And so we're still holding a core bullish position. Now, I said a close below 4,400 would be negative, but really we've come so far from there that you probably would have to say that if we broke below those lows that are around 45.50, where we consolidated a couple of weeks ago, that would be a bearish sign as well. But if that happens, I would expect to be seeing sell signals from our indicators, and we'd move on with those. So I just want to mention a couple of things about seasonality, because it's a big time for seasonality. The last time I did this seminar with Rob, it was right before this signal occurred, and so we talked about that at the time. That turned out to have a record trade. The market was up 200 S&P points between those two dates, which are just a week apart. So now we're moving into the seasonal pattern post-Thanksgiving, late in the year, which is January effect, and then eventually at the end of the year, the Santa Claus rally. So the way we trade this is with Russell 2000 options. IWM is the ETF for the Russell 2000, because the Russell usually outperforms during that time period. And over the entire time period in the last 31 years, we've had 23 gains and 8 losses. On average, the Russell goes up about 2.5% over that time period. This year it's doing better than that, and Russell is outperforming S&P, in most days in the last few weeks. So I don't know, is it too late to get into this? Probably not, but we did get in at the end of Thanksgiving. Now, coming up in January, there's going to be a couple of trades that have a strong seasonal pattern as well. And of course, we'll be trading those at that time too. So I mentioned the offer that we have here. This is our website, optionstrategist.com/MCM web. You can download the PDFs there. I am going to talk about one more quick topic, but I wanted to get this in. So for $249, you get $804 worth of value. Isn't that odd? Why isn't it just 800? Well, whatever. So you get our Option Strategist newsletter, which is the flagship newsletter. It comes out every week, recommendations, a lot of different strategies in there, straddle buys, put credit spreads, all kinds of things like that. You also get the 14-part intensive home study course. Each of the 14 parts is a streaming video about 1.5 hours in length. It starts elementary and goes all the way through advanced. You get my book, Autograph, the Option Strategies, Options as a Strategic Investment. And if you're interested in a consultation on our money management strategies, I will say our minimum account for money management is $100,000. So we have a new website. I invite you to check that out. And we also have a YouTube channel. I record a market comment every Monday morning. And then we have a couple of other newsletters that deal in other things. Put writing is one of them, and special situations is another. So I'm just going to finish with, I wrote an article yesterday that's in this current edition of the Option Strategist newsletter, and the title is VIX Too Low. So the bottom line is it's not really a problem until VIX begins to rise. For example, right now, realized volatility is on the S&P 500, the 20-day historical volatility is 7%. VIX tends to track that. So if VIX at 12, I mean, that's actually, I would say VIX is probably a little bit expensive compared to that. Now, if that 7 rises to 10, that's a problem. That would be a sell signal. And if VIX rises 3 points in a short period of time, yeah, that's a problem. But it's not doing that. And so you might say, well, but it's going to do it soon. I wouldn't bet on that. We define 14 as the demarcation line for VIX. If it's below 14, it's low. Look at what's happened in the past. We had one period of 196 consecutive days when VIX was below 14, another 162 days, another 109 days. Right now, we're only at about 20. And the article goes into a lot more detail about other periods of time when VIX was extremely low, not always staying below 14. Now you can see that, coming out of these things, there were some pretty heavy selling that came afterwards, but still, if you were short the market or just out of the market for those long periods of time like that, that's very detrimental. So, all these articles you're seeing about, oh, VIX is too low, danger, buy VIX calls, all that stuff. Yeah, it'll eventually be right, but it could be a while before it is. So, you need to wait, at least wait till you see VIX go up 3 points quickly. Then you might become concerned. If not, it's not really a problem. Just to finally summarize, that's my email address, and also if you're interested in money management, that's our money management address at email or website. I'm sorry, at the bottom of the screen. All right, Rob, I'm shooting it back to you.
Lara, I got to give you credit on that SPY thing. We've seen this record, oh my God, rip your face off, and congrats on having one of your record trades, that you announced here before it happened. But
it's always good to announce them before they happen. Right?
Hey, thank you as usual. Always incredible information. You are one of the few people that absolutely captivate me with all the thought and history that you put in to getting multiple confluences and taking great trades. Ladies and gentlemen, Mr. Lawrence McMillan of the McMillan Analysis Group. We refer to Larry as the E.F. Hutton of options traders here on Traders Corner because when he speaks and is talking about options, it's a real good idea to listen closely. I guarantee you'll learn something valuable. Keep up the great work, Larry. I was waiting all day for your perspective on the current environment. And please come back and see us again, ladies
All
and
right.
gentlemen. If you're
Yep.
interested in receiving trade alerts from an author of the Bible of options trading at a steeply discounted special Traders Corner price, I've put all of Larry's links in the chat box. You can learn more by going to optionstrategist.com. Thank you again for joining us today, Larry. I hope you have a blessed and amazing holiday season.
Yep. Same to you.
Thanks so much. Ladies and gentlemen, I wanted to pause and wish all of you in attendance today a happy and blessed holiday season. We've had over 1,000 registered traders from all over the world joining us, and we really appreciate you being here with us today and think you'll all be happy you stuck around because we have more special holiday discounted offers throughout the rest of the show. Next up, we have a new presenter. He's a 20-year trading veteran who began his journey toward becoming a U.S. stock market expert in 1999. He graduated from the University of Miami with a master's degree in finance and had the privilege of studying with the best professional investors in the world. Throughout his years of experience, he's developed his own exclusive strategies to obtain great returns from transactions in his personal investment portfolio. In 2003, he began sharing these strategies with people looking to be successful in the stock market. This is how the Wall Street Trading Institute was born, and here to present how to track the smart money with insider signals is Mr. Vicente Luz of Wall Street Trading Institute. Welcome to Traders Corner, Vicente.
Thank you for having me on board here. Thank you.
You're very welcome, sir.
All right, so we'll get started. Welcome, everybody. Thanks for coming out. And today you're going to learn if you ever wish to have the same opportunities as a corporate insider. Disclaimer, obviously, everything we're going to share today is for educational purposes. There's obviously risk in trading market, but you're going to find an edge. One of my favorite indicators is following the smart money. Like you can see this guy here, he bought 2 million shares before an FDA approval. Like I said, my name is Vicente Luz. I'm the Wall Street founder. My goals for today are introducing you a leading indicator that could get you a hot list of stocks, show proof of how highly effective for swing and position trades, and introduce you a tool that can save you a lot of time to find and create your hot list for stocks. Now, what tools do we use to find great trades? One, we find technical indicators, fundamental analysis, price action. These are all to time the trades. But what about insider buying? And who knows more than the company's insiders? You're going to find today the best traders that you've probably never heard of. They're called the company insiders. And what's the definition of a company insiders? It's the directors and officers and anyone who controls more than 10% of the company's shares. This is the direct definition right from the SEC. And I love this cartoon. What do you think what the corporate insiders do when they see the profits rising, sales rising, or they know a big new customers coming on board or a new product? Now, I know times have been crazy in the last 3 to 4 years. We've seen pandemics, we've seen rising interest rates, but to be clear, millions and millions of dollars are being made every single day by these insiders. And what appeared to be the biggest shocks, pandemic, rising interest rates, have been the greatest money-making opportunity we might ever see. And if you rate the right moves, just take a look at the headlines from last year, a couple of years ago, right before the pandemic. Everybody was in panic mode, but the corporate insiders, they know more than anybody on Wall Street. We're purchasing, Mark Cuban was buying stocks during the coronavirus sell-off, right in the middle of the pandemic. Insider buying surged to nearly a 2-decade long. So here's my goal for the presentation. I'm not just going to show you how you can get, if you've lost money in the last months or years, not only get back to even, but way past to the life that you deserve, showing you a key leading indicator. I'm going to show you how you can join the ranks of the wealthy elite by following their trades. And what's in it for you? If you could consistently make it the market, buy the car you've always wanted, take a trip, have the market pay for your vacations, or have the market pay for your home. By the end of this presentation, every one of those would be a possibility. Now, what do? We follow the secret money. And here's a hypothetical scenario. A CEO, for example, like in the middle of the pandemic, we saw Michael Dell buy $26 million worth of his own company stock. What happened after it? The stock went up. He cashed out with a huge gain. Now, the neat thing is that you can follow and copy that same exact trade. And you could enter and exit various times during these big moves. You just have to know where to look. That trade, several trades that we made have turned 1,000 into 22,000 because they're playing the stock, but we can amplify these moves playing options. And I know what you're thinking. When a CEO buys his own company stock and it goes up, isn't that insider trading? Nope, it's not. It's perfectly legal and it happens thousands of times every single day. It's not the legal insider trading. The legal insider trading is when an executive or an officer is connected with a person, like an accountant. He shares his information with a lawyer, with an accountant, or with his neighbor, and uses non-public information. Now, these insiders, they can make these trades. They just have several rules that they have to follow to make these trades. And I know when it comes to the word insider, it gets scary, but insiders and company officials buy and sell shares. And you can see when they're buying big or when they're selling big. And I'm going to show you a neat tool that with a click, you could find it, and it's completely legal. The government has even made a form for it, and we'll see it. We could go over to the SEC website, and this used to be the only way to get this information, but it has hard work and searching. I'll show you guys. If we go to the SEC website, how many forms of these? It's called the SEC Form 4. We go to the filings, okay, and you can search for company filings. This was the old way you had to do it. Daily filing type, you could put right here, Form 4, and you're gonna see just yesterday, how many Form 4s were purchased. Now, were registered, and you could see how many shares they bought. If we click right here, okay, you can see how many shares they bought, sold. Now, to go and find the biggest ones, you can imagine if you go through every single one of these forms, by the time you find it, you might miss the trade, okay? And the form is called the Form 4. And this is the form that you could get exactly, and you can see when they purchased, how much they purchased, what's their name, and what position in the company they have. Now, this is what the wealthy elite do. They follow other wealthy elites with insider buying and selling. And when an insider buys or sells, and I've added, several specific criteria that you're going to learn here today, we get what's called an Insider Pro signal, and I send it out to all the members. And I'm going to show you how you can become a member. And I buy that same exact stock. Just sometimes we amplify the move with some options in it. And this is what the wealthy elite do all the time to make fortunes, and it's totally legal, and it's been right under your nose all this time. And we have just seen and I'll show you several examples, a wealthy insider has just purchased a ton. We're talking about 395 million on a stock that's under $3. And we'll see how the strongest signals are. And this insider signal meets all my 4 specific criteria. And I just sent out the signal to all the members, and I'm going to show you how you can get a hold of it and place that trade on Monday morning. Now, want to know how much these insiders are making? I have the same exact numbers here. This is on one trade. We're not talking about in a collection of trades. Insiders have made $10.3 million on a trade, $19.2 million on a trade, 5.9 million on a trade, 12.9 million. This is on one trade. These guys make more money on their trades than they do on being on the board or being an insider. Look what happened to Biogen, ticker BIIB. An insider bought $27 million worth of his stock right here. And conveniently, he bought it right before an FDA approval for an Alzheimer drug. That stock exploded. If you would have played the options on it, 2,200%. You want to know how much this insider made just off that one buy? He made tens of millions of dollars. And you could have copied along with that trade. You could have seen the exact moment that an insider bought. You could have copied that trade, and you could have turned $1,000 into $22,890. I'm going to show some trade that we did with all the members this week, and we cashed out over 100% in a couple days. This trade, $2,500, turned it into $57,250. Just pause for a moment and think, if you turned in 2,500 into 57,000, that's what most people make in the whole year. 2,500 into 57,000 on one trade following this insider. Remember what I told you at the start. I'm not only going to show you how you can get back to even. That's not the goal here. If you're negative or if you're profitable, I'm going to show you how to become a filter that you could add to any of your strategies. And this happens over and over again. It's not this thing that happens once a year or once every 10 years. This happens over and over again. For example, take a look at Restoration Hardware. Right after the company stock dipped, an insider bought almost $1 million worth of the stock. Now, why do they buy $1 million? Because they know it's going up. They have more info than even the big institutions on Wall Street. And I'm going to tell you in a second. Obviously, most people say, why did he buy? We don't know the exact reason that he bought, but we know that if he puts that amount of money on it, that's all you need to know. That this insider is confident that this company stock, he's showing it not by what he's saying, he's doing it by what he's doing. And I always say that to my students. Don't follow what they say on CNBC or on the news. Follow what they're doing. Sometimes they're saying the stock is negative and they're buying it. We saw that several times during the pandemic. A lot of them came out on CNBC saying the stock market's going down and they're purchasing a ton of shares. And you just I add to these insider 4 specific criteria. Right when I see this 4 and 4 hit, which they have 48 hours. So this is not backdated information that they purchased 2 years ago or 6 months ago. The insiders have 48 hours to purchase, from the purchase to file this with the SEC. And when we get that same exact signal, all we do is copy that trade and sometimes even amplify it with some options, like we did on Restoration Hardware, and we grabbed a 612% gain. And you receive that same exact signal. Here's what happened. You could have turned $2,000 into over $12,240. Or if you would have put $5,000, you would have turned that just in a couple of weeks to over $30,600. Want to see another one? Take a look at Getz, the clothing company, ticker GES. Look at this stock. It was in a free fall from 23 all the way down to $14. Now the insider right here, he was the CEO. He made a huge purchase after 2 positive earning reports that beat the expectations following that gain. Obviously, it was low. He knew the profits were going up. He knew he was going to beat the earnings. You can see on these 2 following earnings reports. And he made a $7.7 million gain on this trade. And he bought it at one of the lowest points ever for that stock. He swooped in. You want to know how much he bought? He bought $4.9 million worth of the stock. Now stock was on a nosedive. Most people that would have seen that chart would have wanted to touch it, unless, like him, he knew the company was profitable and they were confident this stock was going to explode. As soon as we saw this purchase, we triggered an insider SPY pro signal, and all the members were able to follow along with that. Look at this stock, Isaiah, and I love, you could do this on big stocks, S&P stocks, QQQ stocks, or you can do this on penny stocks. And I've seen sometimes on these tiny companies, these signals are even stronger. I'm going to show you one that repeatedly has made money. This is another example, Isaiah. The stock had gone down from $3 to $1. Now what happened right after that insider buy, the stock rocketed 160% in just 10 days. This man right here, Brian Brady, he was on the board of directors. He purchased a huge amount of the company's signals. Planet Green Holdings. This is a stock most people wouldn't even heard of. I wouldn't have heard of it unless I had detected that $10 million insider buy after the stock had gone from $5 down to $3, below $3, and he bought $10 million worth. Just 2 days later after the insider bought. Now, some are not going to move as quick as this one, but this one, 321% in just 2 days after this insider purchased. Or this director, Erline, he's a director at 5 Star Bank, and he's been there most of his career. Now, he picked up 15,000 shares in just 1 week after the company's shares had dipped from $15 down to $3. Now, this circle right here is where this insider purchased. Look what happened right after he purchases. 11 weeks later, this stock goes up 230%. Now, look at the timing on this trade. That's why I said that these are the best traders you might have never heard of. I doubt even the best analysts in Wall Street might have timed this trade better. Or this director, his name is David Seen. He's a director at Heska Corp. He had never bought a single share before. And this is one of my favorite signals, when a director has never purchased a single share, and he acquired a huge amount for the first time ever. He's been a director for years, and this is the first time he purchases. Why is he purchasing? Maybe he knows some information that we all don't know. Obviously he did, because Heska Corp went up 687% right after he purchased. Or when 3 directors, right here, and this is what I call cluster buying, and I'm going to show you the top signals. What would you want to look for? Southwest Airlines, the top 3 executives, they all purchase at the same time within days. August 2nd, August 3rd, 1,200,000, 150,000, and look what they purchased right here. They circled right where they purchased at the 20 cents off the low, and this stock went in a tear. Or look at this director. You want to follow directors who have always been perfect. He bought right off the low. You can see perfect insider buys. And all this is thanks to this SEC Form 4 that we can detect with these insiders that know more than anybody on Wall Street can buy. And why did these insiders buy? You can see they buy a lot of the time when the stock is beating down, and they know it's selling for a lot less than what it's worth. Or the company's doing extremely well, but the market doesn't know it yet. Right? Like what happened on Guess. It was beaten down, but the company was doing extremely well. Their earnings reports were going to rise in the next 2 quarters, but the market didn't know it yet. Now, what information do these insiders have? Big institutions on Wall Street would love to have their info. The sales growth. They know when the sales are growing, when they're going to get a new product, right when they're going to launch a new product or a new service, or when they're going to get they just got a major new customer that they know is going to produce future earnings, or they have new executive hires, or they're going to resolve legal resolutions. And I love these legal resolutions. You're going to see this. We saw this with QCOM right before they resolved several the legal counsel purchased. I love those insider buys when you see the legal counsel, or when they're going to get an FDA drug approval, like we saw with Biogen, or when they're going to get a federal permit or a new legislation, or when there's going to be a merger or acquisition. They have access to all this info and they profit on it. They've made billions of dollars on 2023 just alone on this info. Like what Peter Lynch says, invest in what you know. And this is exactly what the insiders do. Now, a second advantage that we have over them, they have to file the SEC Form 4, but they also have to follow this rule. It's called the short swing rule. An insider is prohibited from short swinging transactions. Means that they're not scalping this trade. They're not getting in and out on the same day. They can't. They can take advantage, but they have to sustain this trade. They have to surrender the company's profit if a transaction like this occurs. So what advantage does that give us? These insiders are thinking long-term. They buy a stock when they know it's going to have a sustained move higher. Now we can profit over and over again for months, getting in and out. We could follow what they're doing, and we're not subject to that rule. So we can see what they're doing, but we can enter and sell that trade over and over, like I've done for several stocks. I'll show at the end of the presentation with this, because we know the sustained move is coming. And we did it on a ton of shares. Now, the third regulation that they have to follow is the SEC rule 10b5/1. Okay, this states that they have to have an insider plan. It's called the insider trading plan. Filed with the broker, not with the government, not with the SEC. That means that they have to have a plan with the platform that they're using, to their broker that they're using. Now, this plan can be in anything. They could be on moving average crosses. They could say, I'm going to exit when we have a next full moon, a lunar cycle. There's no regulation to what the plan has to be. They just have to have a plan, file with the broker. So as long as they do these three things, file the SEC Form 4, don't short swing the stock, and follow this insider trading plan, register an insider trading plan with the broker, they can take advantage of all this information and make millions and millions of dollars. Now, the key thing is that we can follow along with them. We don't have to be mad at them for making millions of dollars. We can take advantage of that same information. Now, number one, what do I like? What are the best insider? Not all insider buys are equal. The first one is I like to follow the perfect insiders that have purchased, and every time they purchase, the stock goes up. Like this insider, look, every circle right here. This is where she has purchased. And look what the stock has done just months later after she has purchased. So you bet every time she's on my radar, every time she purchases, she's made me so much money just following her. And I'll show you who she is. Number two, when you see cluster buying, that's another very strong signal. When you see multiple directors, the information is so good. They know something that the rest of the market doesn't know. You know, not one director is going to buy, several directors will go in and buy. Or the number three strong signal is when you get a first-time buyer. They have never purchased before. They've been on the board for years and years, but the info's so good that they say, I want to get on board right now. Like this 406% gain. Look at this stock, it was under $6, went up to $27 right after the first time buyer. So these are three strong. A fourth one, I would say that's probably not on here, is when you see the legal counsel purchase, the company's attorney. Attorneys don't like getting in trouble, so they very rarely do they get in on a big share here when they're an insider. But when they get in, they know something so good that they don't want to miss it. Now, first-time buyers can also be, I would say, when a company doesn't have a purchase of a big insider purchase in years, and they finally purchase. That's a very strong signal too. It happened on Lulu, and we'll see that example happen several years ago. They got into Lulu in June, and the stock rocketed the next couple of months, and an insider hadn't bought in over 3 years. Now, which are the insiders that you want to cut the list? Because the whole purpose of this is create a hot list of stocks that you're going to follow. And you can add your timing indicators to get in it. You could add, this could just be a leading indicator for you just to create your list. And then you could add several other filters if you want. I do that. I add 4 additional filters to this to filter and just get the best of the best trades. Now, for example, stock options, when they're converting their shares to cash out right before expiration. These are not strong signals, okay, because they're not taking a risk there. They're just converting their options that they usually get for bonus into shares. Or when they make routine stock purchases. For example, you'll see some insiders, they just use it as a savings. They're buying every quarter, they're buying every year at the same time. Or when they're making small trades. Now, a small trade for them might be a huge trade for us. So we want to compare with their net worth or with their annual salary. For example, if an insider purchased $1 million, but he makes $50 million, that might not be a strong signal. But if this insider makes $500,000 and he's putting $2 million trade, he's putting 4 years of his annual salary on one trade, that's a high conviction stock. So we want to filter based on their net worth. And we want to eliminate institutionals. Maybe not all institutionals, like we follow along and we made money last week on, again, Occidental Petroleum. And I'll show you one, it's the Buffett zone and where he's been purchasing. Every time that stock gets down into that 58 to 56 region, he comes in with a huge price. And if you're playing options, we made over 100% within days, right after his purchase. So we eliminate stock options, we eliminate routine purchases, we eliminate small trades, because we just want to get the best of the best. We want to put the in trading, all we can do, there's nothing 100%, but we can put the probabilities on our side. And then in my 20 years of trading, nothing puts the probabilities more on your side than following these insider trades, like we did with Ultra Clean Holdings, where we made 443% when we followed our system. Or when Enterprise Bancorp insider buys were at an all-time high, bigger than what they had done in 2014, 2015, 2016, and they doubled it. This makes a big thing. Why are they doubling the normal insider buys? That tells us they know something. Every single director was purchasing. Or when Heska, a 680% when David Seen, the director at Heska, purchased for the first time. He had never purchased. He knew something was going. The stock rocketed. Or with Cronus Worldwide, the stock gained 392% after an insider purchased. Or what we saw at CRH Medical, where over a 1,200% gain. Now, you could use insider buys to find specific stocks. Now, in my opinion, it's even a bigger signal when you could find sectors. And I have some students that told me I've had a crystal ball. Not because I have a crystal ball. I've been able to predict the leading sector for the next 2-3 years based on insider signals. We could compare in which sector is the most insider buys going on. Like when we did this in 2009, and being in the right sector is, in my opinion, 90% of the work. This can save you being in the wrong sector for the next 2-3 years. Think how valuable it is if you can know which sector is the cheapest, because the insiders are loading up on it. Bank stocks were the cheapest sector in 2009, and we did tech and real estate, right, obviously right after the financial crisis. Insiders knew this crisis wasn't going to last for long. They were loading up on shares. Right after the last elections, almost 3 years ago, I told everybody the energy sector, and we saw a rocket year starting. We caught it almost at the bottom low. And when you catch these sectors at the bottom low, you can make extreme profits, okay, when you can buy it. Think if you would have gotten in right after the election on Occidental Petroleum. We played warrants on a long time warrant on that, just because we got in before Buffett did, just because we saw a huge amount of insider buying right after the elections, the 2020 elections. And when you're in the right sector and you find, so the sector that most insider buying, and you find the stock, the individual stock with most insider buying, you combine those two, and that makes for explosive gains if you could be in the right sector. 1,400% gain on this company. Most people haven't even heard of this company. I wouldn't have heard of it, but it had a huge insider buys and it was in the right sector, and it led us to a 1,400% gain. Now, we used to have to do this manually, so we wanted to build a tool that makes this easy to find. I don't want to spend hours and hours. I want to click and be able to find these big tools. So we hired a whole research team, an ex-hedge fund manager, an ex-investment banker, okay, to tell us what are the strongest signals, plus what I had learned from my days at being a broker. And we needed the data to be able to process 1,000 to 4,000 insider signals daily. And we reviewed over 7 million insider trades to see what are the strongest signals. And we needed the data to store all this data on a Google Cloud storage. And we hired the best programmer that programmed over 10,000 lines of code to develop this tool, which we're going to go on live. With one click, the Insider Spy Pro can find for the last month, for the last day. With one click, it saves us hours and hours. And it not only saves us, it helps us find these signals, where instead of me wanting to look at 4,000 stocks in the market, I can just do my analysis on maybe 20 stocks, have millions and millions of insider buys. So I already have a hot list to start my analysis from. And this has helped me find trades like Evergreen Holdings. After we detected it on our Insider Spy Pro, we went on to make over a 479% gain. Or ExxonMobil, when we purchased almost at the perfect low. Or what about Resolute Energy, REN? This was one of my favorite trades. I turned in 10,000 to over $100,000. Most people thought I was crazy buying a $4 penny stock, but we saw enormous insider cluster buying, and it was in the right sector based on the insider purchases. Or when we saw Brinks, look at Brinks, the CEO did a $2.5 million purchase. Now, Brinks met all my criteria. It was a high conviction trade. This was almost double his annual salary. There was cluster buying. Not only the CEO was purchasing, other directors. and some directors that were purchasing a first-time buyer. So we had 3 different criteria all coming together. And this led to 116% gain on Brinks or Ford. This just happened on 2022, where we saw it was hitting all-time highs, and we made in 4 days. Sometimes you don't have to hold them for, you could swing trade these for months, sometimes years, and make profit. And you can get in and out on quick trades and bounce. Ford, we made 87% gain on 4 days. We just did Ford this week with all the members. We made over 150% gain in 2 days. We hadn't seen a big insider purchase on Ford until this week. Or a 69% gain on Energy Transfer. We've played that one several times. DraftKings has been a big one for us. Well, we made 52% gain in just 10 days. And this was on March 10th. Now look what the Wharton School of Business, probably one of the best finance schools in the world, what they say about insider buying. Investors can reap exceptional profits by imitating the insiders. Look what the Harvard Business School says. When a top insider buys his or her company stock, it rises by an average of 31% in the next 6 months. Now look, making 21% more than the S&P on average. Now that might not sound like a lot, but that makes a huge difference on your portfolio, your retirement portfolio. That's a difference between growing your portfolio and following the S&P to 209,000, or you can grow your portfolio following insiders that would have retired you with 5.3 million. You know, what do you rather retire with, 5.3 million or 200,000? That makes a key, huge edge in the market. Now, I know if you never followed the insider buying, you might be feeling like this guy, a lot of information that you're getting. But we find these trades for you. Not only are we going to give you the tool, not only going to give you the education, you're going to have master classes every month. I'm going to show everything that's on our program. We're going to find these trades for you, like we did for James. He made $2,200 on 5 contracts. Or we did with Bruce or Eric that sent me an email. He booked several huge winners on 3 trades. He was very glad I chose to trade. Or Ross that made $1,400 on options. And he had never done that before. Now, these were 3 signals that we saw in the presentation. 5-star bank, and these were all not hypothetical. We all placed these trades, all our members placed these 3 insider buys. Now, imagine you would have rolled the profits. I'm not saying we're going to go and roll all the profits and go in on all these trades. But if we would have rolled these profits on 3 trades, starting with a small stake of $5,000, that 5-star bank, when Erlander bought, it went up to 16,500. Now in Southwest Airlines, we saw that cluster buying, the 3 top executives buying. We would have placed that trade, 16,000 grew into 151,000. Now we would have placed all those profits. Now we only had at risk 5,000 because the rest, the market has been giving us that trade. And we placed when the CEO and several other directors purchased at Brinks, 151,000 went up to 1.3 million. Now think about it, if in the next 3 trades you could turn 5,000 into 1.3 million. That's life-changing game. And these are not obviously is a hypothetical illustration, but these were 3 signals that you could have done this money on within months. That's a huge, people would change their whole life with 1.3 million, your whole family's life with this. And as a founding member, I'm going to do all the work for you. and you're going to receive one of these new insiders every single week. And it comes to you straight on an insider price signal. And this is what it looks like. I send it right to your phone. We have a private Telegram group where I send you all these trades. There's one ready to place right now. I give you the company's name, the stock ticker, who made the purchase, how much they buy and sell, and we put our filter, our timing filter on it, which you're going to learn the timing filter to get in at the perfect time for additional filters besides the insider signal. Plus, you're going to have the tool. You're going to be able to go in and verify it. That's the key, right? You want to learn, but we're going to give you the fish while you learn. We're going to teach you how to fish. We're going to also give you the fish. And this comes right to your phone. You never miss it on your spam email. It's in a private Telegram group. You can take these trades. And immediately after this webinar, you're going to be able to get your very first Insider SPY Pro signal. Now, sometimes we'll do 2 or 3 signals in a week. We promise having you at least 104 signals every single year. That's 104 opportunities to make money following these insiders. And in a moment, you're going to have the chance to get it all, including the brand new Insider SPY Pro that just signaled. And remember, you're going to be able to get it in a few minutes. And going forward, you're going to receive these signals, 8 shots at making money every month. Now think if you can just make, and we've had students make a lot more, some make less. Think if you can make $2,000 to $3,000 per signal, and some are going to make more, but obviously we're going to have some losers. Let's say you can net $2,000 to $3,000 per signal. This is a potential value of over $300,000 that you can add in 2024. Plus, you're going to have access to the software, the Insider SPY Pro. We're going to give you lifetime access. This is a $5,000 value alone just for the software. We've spent over $250,000 developing this software. Plus, you're going to get access to, it used to be an annual 2-day masterclass. Now we're doing them monthly. We've sold this masterclass without the software for over $5,000. And you're going to get access to our training. You're going to be able to, I'm going to train you every single month, 2 days. They stay recorded. Your first one is in January, 2-day intensive course. We do a 10 a.m. to 4 p.m. 2 days where you're going to learn timing, how to time the market, additional filters that you can do to the insiders. Just for the masterclass, it's worth the program. So what are you going to receive? You're going to receive your very first insider signals, 52 insider signals this year and next year, because I'm going to give you lifetime access to the signals. We charge normally just for alerts, $19.97 a year. You're going to get the license to the software. You're going to get the monthly now. That's not an annual meeting, 2-day meeting boot camps. We've charged for the annual one $5,000 a year, and you're going to be able to get every single month in January, February, March, April. We put live trades during these meetings. We hold them live in different cities around the U.S. If you can't travel, you can see them right from your home. Just along for this is worth your money. And I'm going to throw in for all the members getting in now this weekend, and this will just be for the people who get in this weekend. I'm going to give you the data. Normally you have to pay $199 a month for data times 12 months. That's talking about over $2,400 in data for the software. I'm going to absorb all the cost of the data. You're going to get lifetime access to the data. So it means you're going to get the trainings. You're going to get lifetime access to the data. Now, a warning, this is not for you if you're a gambler. If you're looking to turn $50 to over 5 million, if you're not dedicated, if you're not going to attend these to train you, I'm going to train you how to trade these markets. We're going to look at these insider signals together. You're going to learn how to filter these best signals. You're going to learn how to add additional filters to the signals. So you're going to have to put some work in it. If you're not willing to put work in it, this is not for you. Now look what some of my best students, they attended our workshops, they learned the signals, they followed along. Jeff T, in 2020 alone, he made over $2 million in profits. Tom G, he made $40,000 on one trade. He did it several times, but this is the one that he did it. He did it on DraftKings. And he did over 40,000 on the Dell, and we were all in lockdown, right? March 20th when Dell did this. He sent me his statement. Okay, now there's a special price. We're giving it away. This is only going to be for this weekend. Okay, normally the price of this program is $49.97. You're going to get it lifetime for one payment of $9.97 when you go right now to Insider Spy Pro. Okay, and we're going to throw in an extra bonus. I'm going to give you access to our trade funder where you could get at least 25,000 to 500,000 on a funded account. All you have to do is pass the test. Normally, to be able to take the test, you got to pay $39.99 a year. Now we're going to waive that, and you're going to be able to access that account. You place 9 winning trades on this funder account, and they could give you between 25,000 to over $500,000 on these trades. Depends if you're doing stocks or options. We're throwing in that insider alerts where I find the best trades for you. The regular yearly price is $19.97. You're not going to get it yearly. You're going to get it lifetime. You get a customer support. You need any help on installing that software. And I'm giving you the training, education. I'm going to show you everything I've learned, and I hold nothing back on those 2-day master classes. Every single month, not for a year, for lifetime, for one payment of $9.97. Just one of these. If you were just purchasing the master class, it'd be worth it. If you were just paying the trade funder, it'd be worth it. If you're just buying the software, if you're just buying the alert service for lifetime, and you're going to get it, access right here. All you have to do is go to Insider Spy Pro. I'm going to be putting the link in the chat. This is the promo. Oh, thank you.
That's
So you
Vicente, I have to say, you had me on the edge of my seat. I know how important that insider trading thing is, and I spoke at a financial literacy seminar last week. Not to put you on the spot, but do you know what an additional 2% gain on a $5,000 investment is over 30 years?
Oh, it must be in the millions, right?
4-point-something million. I don't remember it to the penny, but I remember one of the other presenters or speakers, making that note, and it just blew my mind. And when you had the chart up of, the insider buying versus the SPY, retire with 200,000 or retire with 4 million, it really just jumped out at me. And I mean, your signals look incredible. I don't mean to cut you off or anything, but we run a couple minutes over. I want to thank you for being here and making an incredible offer like this to our audience. I mean, your system, you have my attention and may see me, my name on a credit card receipt shortly. But
we're having a startup class this Monday, so I'm going to help you set up your trade funder account. I'm going to help you set up the software. We're going to be looking at some trades. So all the people who get in this weekend, is Monday night at 7 Eastern. And as soon as you purchase, within a couple hours, you have the download link, the activation link. And on Monday, you'll have it on your PC, and we're going to do our startup class for everyone who gets on this group.
Awesome. Ladies and gentlemen, if you want to follow and track the insider and smart money and bring more consistency to your trading, Mr. Vicente Luz of Wall Street Trading Institute has a solution for you. It's called Insider Signals. His links are all over the chat box. I apologize. I put a pro on the end of the first one. I retyped it. But Vicente, thank you again for being here. We hope you come to see us consistently and come back. Have a blessed holiday season, sir. I wish you all the best.
Well, thank you so much. I look forward to seeing everybody on Monday. Thank you for your time. I hope you have a wonderful Saturday.
Thank you too. We're going to keep the ball rolling. Ladies and gentlemen, our next presenter is one of my personal favorites because we've got a lot in common. He began his career in 1980 and was one of the original market makers at the pit of the Chicago Board of Options Exchange. He's traded all of the major exchanges in Chicago and is currently a member of the CBOT. He spent the last 8 years as a mentor and educator to traders of all levels and probably a very winning poker player. He's also developed a program for high school students that allows them to learn to trade the financial markets. Ladies and gentlemen, it is my pleasure to introduce a seasoned professional who's always entertaining, never bashful, rarely filtered. Here to present Trade Options with Bubba is Mr. Todd Bubba Horwitz of BubbaTrading.com. Welcome back to Traders Corner, Bubs.
What's up, Rob? Great to be back with you. Always a pleasure to hang out with you guys and have some fun and rip a few things. You know, it's poker's good. Everything's good.
Hey, you want to laugh at me? One of my friends was getting off the train. He missed the connecting, to the town he lives in and put on Facebook for a ride. So I went and gave him a ride from the train station because I live by it. And he lives 5 minutes from my poker game. I walked in, I made $2,000 in an hour or two and walked out.
And there you go. Yeah, but I'm still waiting for you to come here, baby.
We're a bit far away. And like I said, last week I was in Florida speaking at a financial literacy event and take the junior to see his grandparents. But you and I are going to cross paths one day and it's going to be epic.
The tables are waiting, brother.
Amen.
All right. Well, I guess I can start. And what's up, everybody? Welcome aboard. Glad you could be here. Obviously, I've been a trader for a few days and have a lot to talk to you about. And we'll get started right now. But we're going to talk about options today. And my investing style is old school, years of tradition, unimpeded by progress. But I think the big key to remember is that amateur traders want to be right, pro traders want to make money, and you've got to decide which one you want to be. Okay. The disclaimer: first of all, I'm only going to show you the results from this past week, but there is no guarantee of results. Past performance is never indicative of the future. I will promise you a good education, and that's all I will guarantee. My name is Todd Bubba Horwitz. I've been doing this for 45 years. I was a floor trader for 30. I've been trading off the floor for the last 15. I was one of the original market makers in the SPX, and